policies of the investee, or called the associate. And if the investor owns 50% plus one share, or more than 50%, then we have this investment in subsidiary, which is governed now by advanced accounting, this PFRS 3 business combination, or IFRS 10 called consolidated financial statements. Now, these percentages are not absolute, meaning even if it's less than 20%, there is still a possibility of having significant influence. For example, being a member of the board of directors, you can have significant influence. It's just that having 20% gives a presumption of significant influence. The same is true for control, investment in subsidiary. If it reaches 20%, we call it significant influence. If it's more than 50%, we call it control. Basically, the parent, the investor, becomes the parent, the investee becomes the subsidiary. So first, we have fair value through profit or loss. I've summarized this na lang. No? When it comes to equity instrument, it's relatively easy as compared to debt instrument, debt securities. Parang problematic. So first is fair value through profit or loss. This is used for trading securities. Now, old name for this under PIF PAS 39 is called trading securities. So it uses fair value method. That means every year and you adjust it to its fair value. Any changes to the fair value is called unrealized gain or loss, and it is reported in profit or loss. It's still unrealized because you have not sold the instrument yet. Now, being equity securities, as investor, you will be entitled to dividends. Any dividends received will be recorded as income. You debit cash or dividends receivable, credit dividend income. And under FVPL, transaction costs are expensed outright. So you have their examples. Trading securities or quoted equity instruments. What are quoted equity instruments? These are shares traded in the public. Kana nasa PSE. Now, second example is your fair value through OCI. So this is applicable for equity instruments which have been irrevocably designated as FVOCI. So it's still measured at fair value, but changes in fair value is now reported in other comprehensive income. And it will be accumulated as OCI. Where do we report the accumulated OCI? Sa asset, liability, or equity? Equity section. And still, dividends are recognized as income. This time, transaction costs are capitalized. So you add it to get the total cost of the investment. Now, upon disposal, katong accumulated OCI will not be recycled to P&L. Instead, it will be reported directly to retained earnings. By the way, sa inyong kaning IA1, nagbalik, bigat man mong na-mix, no? Okay, there's this one significant difference, and I'll announce kung unsa to i-follow later sa debt securities. So again, upon disposal, when you sell the investment, the accumulated OCI will be reclassified from OCI directly to retained earnings, not sa P&L. So you have examples: non-trading equity securities, here non-trading, and those equity securities designated as fair value by irrevocable election. And investment in associate, we'll discuss this in detail in the next half. You're going to use equity method. Changes in fair value is ignored. When we use equity method, increase your investment account will increase if your associate has an income, because you share with that income. It will decrease if your associate has a loss. Now, dividends under PAS 28 is not treated as income. Instead, it's treated as withdrawal. It's treated as a reduction of investment. What we treat as income is our share in the profits of the associate. Of course, if there's loss, you will also share with the loss. And transaction costs are capitalized. It will be discussed in detail later. And this one will be discussed after. This maybe next year, third year, second semester. Investment in subsidiary or business combination. So business combination is governed by IFRS 3. The consolidation procedures, the journal entries, the preparation of financial statement is governed by IFRS 10. Now, it uses cost method, and in the illustration, sometimes it uses equity method. And then you have the consolidation procedures. So basically, you're combining financial statements. Sa parent of sa subsidiaries, i-combine tanan. For now, we'll focus on 1 and 2. And then 3 will be discussed next. 4 won't be discussed extensively. Now, as for dividends, dividends received are considered as income. They are distributions of corporations' earnings to its shareholders in relation or in proportion to their interest. So basically, this is how you earn from your investment. So there are 2 ways for you to earn from your investment in equity securities: by dividends and by capital appreciation. So this is one way. And for dividends, you have 3 important dates: date of declaration, date of record, and date of payment. So date of declaration is the time the board of directors declares the dividends. So after they declare dividends, after a few days, they will have a specific record of shareholders. Katong nasa lista, sila lang ang makadawat. And then right after, you'll be paid. Date of payment. Now, from date of declaration, the share itself will be entitled to a dividend. So when you sell that share before the date of record, that share is said to be selling dividend on. So when you compute, I believe this is not discussed in Wigan, when you compute for the cost, you have to account for the dividend included sa cost. Okay, you have to separate kung pila ang cost allotted to the share and the cost allotted to the dividend. Now, once the date of record commences, ilista na ang name. So, ang dividend would no longer be paid sa kinsa nag-hold sa share. Instead, it would be paid to the person listed in the record. So, if ibaligya nimo after the date of record, it's now called ex-dividend. You're selling the share without the right of receiving the payment of dividend. Kaya ang makadawat sa dividend, kung kinsa ang name nga nakalista sa record. So if it's sold ex-dividend, the total price that's paid for will only be allotted to the shares. So basically, it's the market value of the shares. So between date of declaration of date of record, that's dividend on. Between date of record and date of payment, that would be ex-dividend. So there are several types of dividends. You have cash dividends, the most common. Of course, we debit cash, we credit dividend income. Or if it's receivable, okay, declaration pa debit dividends receivable, credit dividend income. And sometimes they also declare property dividends. Property dividends are measured at fair value. So you debit the certain property. It could be inventories, it could be any asset. And then credit dividend income. You record them at fair value. Now, liquidating dividends are not recorded as income. They are treated as a return of investment. So when you receive cash, you don't credit dividend income. You credit the investment itself. So it will decrease your investment account. And finally, share dividends, which are not treated as income as well. So basically, didaghan lang ang imong shares. So for example, you have 1,000 shares. And then, the total cost of the shares, 1,000 is 1 million. And then there's this share dividend declaration. What happens is that you just divide your total cost, 1 million, divided by your new number of existing shares. There's no additional income. The cost per unit merely goes down. Now, this share dividend can be of the same class or of different class. For example, if you're holding ordinary shares, it's possible that the entity will give you additional ordinary shares. Or sometimes they would give you preference shares. But in both cases, you do not recognize an income. Because your ownership, the interest that you own remains the same. Ang mahitabo lang, if you received a different class, like a preference share instead of an ordinary shares that you hold, iprorata ang total cost nimo sa ordinary share would now be divided sa preference share. So for example, you have 1 million investment in ordinary shares. No? It would be divided between investment in ordinary share and investment in preference shares. So ma-allocate lang siya. Now, for debt securities, muna yung problematic. For debt securities, these are forms of, forms of loan. To make it very simple, it could be a bond, a bill, promissory note, or the likes. It's an unconditional promise made under seal to pay a specified sum of money at a determinable future date, make periodic interest payments of a stated rate until the principal sum is paid. Because there are two ways to obtain funds for your business. That's why your accounting equation is written asset is equal to liabilities plus capital. You either ask for investors or you borrow money. If mongutang ka, you pay interest and then you return the capital. For the investor side, you don't pay interest but instead you pay dividends. And upon dissolution, if mawagtang ng company, you return their investment. Okay. Two ways. That's why we have equity securities and debt securities as well. No, mo mirror na siya. Now for debt investment, it's quite unique because unlike equity investment, wherein for PFRS 9, we only have fair value through profit or loss and through OCI. For debt investment, we have a third one, amortized cost. And it all depends upon the business model. If the business model is to buy and sell, to trade, then the debt securities will be recorded at fair value through profit or loss. But if the business model is to collect contractual cash flows, interest and principal, then it will be recorded as amortized cost. If the business model is to collect contractual cash flows but sell it, if na mo palit, then you have OCI. So again, going back to the old names of these standards, you have FVPL as trading securities, FVOCI as available for sale securities. So it's available for sale if name mo palit. And you have amortized cost as held to maturity. Is vacant using, I think from the copy that I have, still using the old names. So it's possible in the exam will use the old names. So be familiar. So financial asset held for trading or financial asset through profit or loss. So money akong gingon nga difference. Now under PFRS 9 it says nga debt security shall be measured using the effective interest method. That's why Weygandt records interest income, which we don't do in VALIX. In VALIX, the fair value, the most commonly used instrument here are bonds. The fair value of the bond is remeasured every year. Any difference of fair value is recorded as profit or loss, and then that's it. Nothing more, nothing less. Pero, kang Weygandt, mag-recognize po dyan siya interest income. Now, I would not say which one's correct, but Weygandt makes sense. Because again, under PFRS 9, debt securities or debt investment has to be measured under effective interest method. So you have to record the interest. I think what VALIX does is that wala lang niya separate maybe ang fair value adjustment and the interest income. So you just lump it in the difference between fair values. Now, for the exam, unsa man inyong gi-practice sa IA1? Do you record interest? Naabay nag-discuss nga nag-record sila interest? Okay, if there's none, I will incline to use VALIX. But if inyong gi-discuss kay katong with interest, I will use with interest. Wala. So, we'll stick with the VALIX rules nga in trading securities, we only compare the fair values. Okay? And any difference of fair values will be recorded as unrealized gain or loss. Klaro? I hope that's clear na kaysa exam mo na ito i-follow. Okay? Sige. Now, okay, so for equity securities, it's easily understandable because we have, Philippine Stock Exchange. We have their shares, buy and sell, easy to purchase. Now, for debt securities, it might seem a little bit confusing. Now, corporations and governments as well, they sell bonds. They sell. Although I use the term they sell, technically, mangutang na sila. Mangutang na sila to whoever buys the bond. Now, these bonds, it's called bond indenture, the paper. These bonds, ilan na silang ibaligya. Ang kanang bond will entitle the bearer, kung kinsay gakupot sa bond, to the interest payment. That's why you can transfer it to several persons. Mo na ay possibility nga 10-year bond, remember sa cash equivalents, sa treasury bill, there's 1-year treasury bill but purchased 3 months before expiration. Meaning it has been in circulation for some time, but si company gi-purchase niya 3 months before expiration. Because these bonds and bills, they can be negotiated. Mura siya bearer instrument. Do you have negotiable instruments? Wala. Okay. So, it's like the government promises to pay the bearer, kung kinsay nagkupot, like 10% interest based on 1 million pesos. So, kung ako siyang ibaligya sa inyo, kamo na bayaran ng government. Ibaligya po niyo sa lain, sila po ang bayaran sa government. So, it's transferable, so to speak. And because of that, they are also traded. Although I'm not familiar of any platform for which we trade these bonds and bills. From what I know, can only work through a a broker. No. So these bonds, you can use them as buy and sell. In which case you use trading, FVPL. So according to PFRS 9, we recognize financial asset when and only when the entity becomes a party to the contractual provision. Okay. So initial measurement would be fair value plus transaction cost. So is it fair value or present value? Now, in this case, the fair value is the present value. That's why when we compute, we use the market interest rate in computing the present value. To be safe, this is taken from the standard. You can use present value because that's what is commonly used by textbooks and in exams. So subsequent measurement, so it depends upon the business model. Again, it could be fair value, it could be amortized cost. So if amortized cost, we discussed this already. Fair value option. Okay. Now, fair value option, this is for debt securities which qualifies under amortized cost definition, but the entity decides to irrevocably designate the same as profit or loss. And so you're going to use fair value option, meaning any movements of fair value, you record it in profit or loss. So ari na ang challenging na part, no? I've browsed through Waygan. Apparently wala siya nag-discuss og mga acquisition in between interest dates. Actually, very simple lagi yung explanation. So, you can acquire bonds at interest dates or between interest dates. As I have said, these bonds, they pay interest to whoever is holding them. Now, in most bonds, they pay semi-annual, twice a year, 6 months apart. Now, if you bought the bond at interest dates, mas simple siya because you purchase the bond for whatever the bond's worth. Ang problema if palit siya between interest date. Why? Because of the existence of accrued interest. Now, say for example, the bond pays January and July. If gipalit nimo siya pag February, that means from the last payment nga January, ni-accrue na siyang interest by 1 month. And the problem with accrued interest, you have to deduct it from the purchase price. Okay? Kuhaon na nimo. Kay kanang imong nagipalit, silbi duha imong gipalit, the bond and the accrued interest. So you have to allocate the purchase price. Imong igahin nga to sa accrued interest and the rest goes to the bond. So if it's acquired at interest date, it's simple. Debit, trading securities, credit, cash. But if it is acquired between interest dates, you have an additional debit. As I've said, duha imong gipalit, the bond and the accrued interest. So you have to allocate. Then when you collect the interest, you debit cash, you credit accrued interest receivable, you credit interest income. Or you can have this. Okay, so for trading securities, again, this is based on VALIX. No amortization of premium or discount. Instead, you recognize unrealized gains and losses directly in P&L. And because it falls under the definition of current asset, as provided by PAS 1, it's traded within 1 year from balance sheet date or it's purchased with the intention of selling it. You classify it as current. Investment in bonds at amortized cost. So somehow it's easy considering that you already have a background in preparation of amortization table. So you practice preparing amortization tables. So you have bond premiums, bond discounts, acquisition cost less the face amount. Acquisition cost is normally your present value, no, the fair value, as I've said. The difference between the acquisition cost and the face amount is either bond premium or bond discount. Now, for the investor side, we do not account for the discount and the premium separately. Unlike sa corporation side, wherein we record bond premium and bond discount. Now, when we sell the bonds prior to maturity, as I've said, you can transfer the bonds. You can sell it before its maturity date. This is your computation for gain or loss. You have the sales price less the carrying value of the bond. How do you compute the carrying value of the bond? Original cost minus the add the amortized discount or less the amortization of the premium. Or basically, to be easy, the carrying value. If you have prepared the amortization table, the last column, the balance. No? Sales price minus the carrying value equals your gain or loss. But take note, if interest has accrued, you have to take it into consideration, or you have to take it out from the sales price. And we have other kinds of bonds as well. You have convertible bonds. These are not included in Wigan, but they're in Valex. You have convertible bonds, those which can be converted to equity securities. Pwede siya convert to ordinary shares and preference shares. Callable bonds, which can be redeemed by the issuing entity in their option, even before the maturity date. And serial bonds. Now, serial bonds are bonds that's settled in installment. Now, there's a confusion between serial bond and a regular bond. In a regular bond, di ba naman tayo payment na tayo date, payment, interest, principal, and the balance. Kanang nasa payment, they are interest payments. Your principal remains the same. Mo na at the end of the term, the last balance nga mo appear sa imong amortization table is equal to the face value, the principal, which eventually you pay. Now, serial bond, you pay interest and you pay a portion of the principal. More siyang installment. So if you prepared an amortization table, the last balance that will appear is zero. The last balance is zero because you have been paying it annually up until the end of the term, in which case mahimo siya zero. And term bonds, the regular bond nga akong gi-mention, they are called term bonds. No? So methods of amortization: straight line method, bond outstanding method, and effective interest method. So for most bonds, we use effective interest method. Bond outstanding method is used for serial bonds. I will not include an exam concerning serial bonds. So we, under IFRS, it's effective interest method. Now, as you all know, there are two kinds of interest rates. You have the nominal and the effective interest rate. The nominal rate or stated rate, or in foreign books they call it the coupon rate. They are the rate na stated sa bond, indenture, sa contract. Like 10%, 1 million. So 1 million multiplied by 10%, that's the interest received. No, cash received. Effective rate, yield rate, or market rate is the rate used to compute the interest income. The rate used to compute the present value. Okay? And of course, you know this, we discussed this in EGD. If effective is greater than the nominal, it's a discount. If effective rate is lesser than the nominal rate, that's a premium. And muna ang problematic part. Bond investment at fair value through OCI. Now, yung business model is to collect contractual cash flows. That means you prepare an amortization table, but at the same time, it's available for sale. So you measure fair value at each year end. So you prepare an amortization table. That means you record interest income and you amortize. And at each year end, you're going to get the fair value. So same thing, movements of fair value, it goes to OCI, but the interest income goes to profit or loss. Now, when we dispose of this bond under OCI, mo ni siyang quite interesting because it differs from equity investment. Sa equity investment under OCI, the accumulated OCI goes directly to RE, but here, it will be reported to P&L. So this is one of the few exceptions where OCI is recycled to profit or loss. Okay. This is recycled to profit or loss. So you have their computations, fair value option, and then the market price. Market price of the bond is simply the present value of all cash, future cash inflows, present value of the interest payments, and present value of the principal payments. Okay, so let's solve. I actually have a lot of questions here. We might not be able to finish everything, so we can move on to the next part. Wait, okay, let's start. By the way, the nanay i-announce, maybe it's not applicable to you. Kasi mo take sa board. 2026, 2027, 2028 man mo na. This is the new TOS and syllabus, SIPALI, TOS and syllabus. So wala na yung partnership accounting. Discuss mo partnership accounting? Wala. Sa inyong 1104. So basic accounting lang mo and what corporation? Basic and then partnership. Sa corp, okay. So in one subject you have basic accounting, yeah, partnership, corporation, introduction, no? That's 3 units. In our time, 6 units may sa basic accounting, 6 units pag yun parkour. So I'm sure that's a lot to absorb. Karon wala na yung partnership accounting, there are a lot of changes. Sige, so let's start with number 1, a correct valuation. Held for collection or held to maturity or amortized cost. Selling in held for collection and selling, that's available for sale. Investment at amortized cost. Held for collection, investment at amortized cost. Trading securities at amortized cost. Answer would be bravo. Number 2, unrealized holding gains or losses which are recognized in income are investments classified as unrealized holding gains and losses. P&L, so that is Charlie. Difference between unrealized gains and losses and realized gains and losses. You have unrealized gains and losses for movements of fair value. Okay? Unrealized holding because you're still holding the investment. But once you sell it, the difference between the sales price and the carrying amount is called a realized gain. Realized because it has been sold already. Number 3, that securities bought and held primarily for sale in the near term are reported at delta. Those are trading securities. 4, unrealized holding gains or losses recognized as OCI. Answer is alpha, AFS, or available for sale. Okay, next. 5 are requirement. Okay, 5, a requirement for an investment to be classified as held for collection is sold payment. That's delta. 6, unrealized holding gain on a company is held for collection in selling AFS should be reflected in the current financial statement as the accumulated OCI, where? As delta. It's part of equity. By the way, where do you present FVOCI? Current, non-current? Non-current. 7, trading bond investment are reported at Charlie. Number 8, which statement is correct in regard to trading bond investment? Realize. That's delta. Next, number 9, if the parent okay, I'll just discuss this na appearance here. The answer for this, if the parent company owns 40%, that is investment in associate. So, which method should we use? The one I mentioned earlier, equity method. 10, an ownership interest of 50% of the ordinary shares of another corporation should be accounted for as Charlie. But the answer key sa Wagan given is alpha consolidation method. I would not agree ng 50%. It should be more than 50%. Kaya nasa standard is more than 50%. 50% plus 1 share to be precise. Sa Wagan, I think it's alpha. No worry, dili ko pagawas sa exam. 11, under equity method, if an investee company generates net income, again, this is for investment in associate. Answer is Charlie. So, if your associate has an income, you recognize a portion. If there's a loss, you recognize loss. 12, an ownership interest of 15% in another company's voting shares, which are held for purposes other than trading, should be recognized using Charlie. Sorry. Other than trading, delta. The business model is Charlie, but accounting should be fair value method. Less than 15%. Actually, Charlie could be an answer as well. And nasa answer key is delta. But given the nature of the question, it's not asking sa business model. Instead, it's asking how do we account for the investment. So a more accurate answer between Charlie and Delta would be Delta. 13. Accrued interest on bonds that are purchased between interest date is... Answer would be Bravo. That's why I said if between interest date, the total transaction price must be allocated between the accrued interest and the bond. 14. The interest income for the year would be higher if the bond was purchased at Answer is Charlie. Effective EGD, effective greater discount. 15. The interest income for the year would be lower if the bond is purchased at Delta. Opposite. EGD, effective greater discount. 16. The actual interest earned by the bondholder is alpha, effective interest rate. 17. The interest rate written on the face of the bond is called coupon rate, stated rate, or nominal rate. 18. To compute the price to pay for a bond, what present value concept is used? Answer is Charlie. Present value of 1 for the principal, ordinary annuity for the interest. 19. Bonds usually sell at a discount when investors are willing to invest in bonds. Correct. Effective greater discount. 20. Bonds usually sell at a premium. So may opposite sa effective greater discount. Bravo. Stated or nominal rate greater. 21. The effective interest rate on bond is lower than the stated rate when the bond sells. Bravo, no? If nominal rate is higher, then that's a premium. If it's a premium, it's above the face value. 22. Effective interest rate on bond is higher than the stated rate when the bond sells at... That's correct. It's Charlie. Okay, next. 23. Okay, 23. The interest method of amortizing discounts provides for... That's correct. Increasing amortization and increasing the interest income. Okay, your interest income is, diba? In ARC, you have the date, the payment, the interest, the principal, and the balance. How do you compute the interest? That's balance multiplied by the effective interest rate. So if it sells on a discount, your effective interest rate will your balance magkadako until it equals the face value. So it follows your interest income would also increase. Number 24. Interest method of amortizing premium. The answer given is bravo. It's let me think. Premium. So dapat decreasing amortization. No? We'll go back to this. Okay, I need to see an amortization table. Okay, 25. Bonds can be recorded as financial instrument carried at fair value through OCI. True or false? Can you record debt securities through OCI? True. Statement 2. Can you use securities through profit or loss? Yes. 3. Stocks can be recorded at amortized cost? False. Now for stocks, it's only fair value. Next. So answer is bravo. 26. When the interest payment dates of a bond are May 1 and November 1, and the bond is purchased on June, the cash paid by the investor would be which one is most accurate? Cash paid by the investor would be increased from. That's correct. So, you always look sa last nga payment. Ito example ang gihatagan niya, remember, January and June nga payment. So, if gipalit siya February, from January to February ang accrued interest. Same here. So, from May to June. 27. Okay. 27, the fair value of security. What should the company report in its 2022 income statement? Answer is unrealized or realized? That's correct, Delta. Why unrealized? Because you're still holding the investment. Unrealized holding gain. $22. Company purchased 17,000 shares for 382,500, held for trading. Fair value was this 373,150 at December 31, 2022. Sold all Montesilio shares for 27.25 with brokerage fees. Jackson Company should report a realized gain. So the answer is question is realized gain. Answer is bravo, 75,100. How'd you get alpha? Did you use 380 to 500? Now, the thing with using the 380 to 500 is this. Now, these are trading securities. From the cost, okay, from 382,500 up until 373,150, when you prepare the income statement, the financial statement, you're going to recognize unrealized gain in the income statement, correct? For how much? Pila difference? 382,500 and 373,150. That's 9,350, no? So you already reported it in the income statement. So when you sell, ini July 3, selling price 2725 times 17,000 minus the current carrying amount. Unsa man ang current carrying amount? 382,500 or 373,150? It's 373. So mo na to ang gamiton. Okay, if we're going to use the 382,500, we will be recording the 93750 nga gain twice. Diba? Nag-record naman kapag 2022. So if i-account pa nimo siya sa 2023, makaduha na siya record. Yes. You debit investment in help for trading, then credit gain, unrealized holding gain. Sorry, loss mo din ino? Loss, ang selling price, 17,000 times 20. Ang initial purchase would be debit trading. We'll just use trading securities to be can. Debit trading securities 382,500. Credit cash 382,500. At year end, kanigamay man siya, debit unrealized holding loss 9,350, was it 9,350? And credit trading securities 9,350. So our updated balance for trading securities would now be equal to 373,150. And finally, when we sell, selling price 463,250 minus 373,150. Claro? Okay? We'll proceed. Take note ng question kay realized gain. So that's the difference between the sales price and the latest nga carrying amount. The current carrying amount. 29. Ignoring income taxes, what amount should be reported as charge against income? Equity securities portfolio. Pila? Pili dapat. The problem is silent. Kung trading ba siya or OCI? PNL ba siya or OCI? So, would you presume? Or there's a hint in the problem which indicates the business model. Diba nangotan ako? How do you classify OCI? Non-current. If trading, and the problem says appropriately included in the current assets. So, unsa man ni siya? Trading. If it's trading, pila i-report? 7,000. That's correct. Huh? So be wary of those items. Number 30. Current company purchase bonds with face amount of by the way, magitudlo naman mo kanang amort kanang sana siya? PV factor ano? Okay. Are you allowed to use cycle? Pwede ra sad. I don't know. Nangotanan ako. Pwede ra. Okay, good. Kaya I don't know how to use this in computing PV factors, no. Cycle ako ni Bawan. So okay, when I give the part, I'll be clear here. When I give the part, I will not give the PV factor. You would have to solve the PV factor. Pero to be safe, I will indicate kung pila ka decimal. Now, what I normally do in my exams, na ko'y general rule nga if the problem is silent, you round it off to 3 decimal places, no? And then for every problem magbutang sad ko. Okay? Para parehataran. If dili gani, then you choose the closest answer. 11. Current company purchased bonds with face amount of 400, current at 102, and paid brokerage cost of 6K. The amount to be recorded as the cost of this debt investment is answer is bravo. 400,000 times 1.02 plus transaction cost. Next, Polska Incorporated purchased 400 shares of Milay Manufacturing as trading investment. During the year, Milay Manufacturing paid cash dividend. At year end, Milay Manufacturing shares were selling at 69 per share. On the income statement, what is the amount of unrealized gain and loss and dividend revenue? Pilay capital appreciation, pilay fair value change, unrealized holding gain. 1,200. Dividend income? So total? Answer is delta. Very good. 32. Tumor Corporation purchased 800 ordinary shares of Viking Industries as trading investment. During the year, Viking Industries paid a cash dividend of 3.2 per share. Year end, you have the fair value. What is the total amount of unrealized gain or loss and the dividend revenue? Gain or loss? Loss amounting to 960. So net income is, and the net effect on the income statement is alpha. Next. Wala ma-adjust. Let me check. Kasi siya anchor. Let me check. Dapat 2021 ratanan. Tanan. So what is the carrying value? Answer is Charlie. Next, 34. Master company acquired the following portfolio. No sales occurred. What is the carrying value? Answer is alpha. That's correct. Next is Cordial Company. How much should Cordial Company report as unrealized holding loss? Answer is Charlie. Next. So you just get the difference between both. National company. What amount of gain on the security should be included in P&L? Actually, mo ni ang murag same format with Wacant. No? It uses the fair value adjustment account. Answer is Charlie. Now, you can either just add everything, you get the difference, and then you deduct the 40,000. But for me, I'd rather interpret the same as kaning securities ABC. Yes, securities ABCs 12900 and 16. And then at year end, na kuno 40,000 debit balance for the fair value adjustment account, which means that these securities was credited. Okay? So you get the difference and then you compare it with the market value. Next, number 37, rainy. Same. So you have 45918 and credit balance. Answer is delta. So same thing. But this time, this is credit balance. That means you add this and then you increase it by 50,000. And then you compare it with the market value. So basically, if you add this and then add 50,000, that is your fair market value by December 31, 2021. And then you compare it with 2022. 38. Ribbon Company invested 600,000 in equity securities representing 20,000 ordinary shares. Classified as profit or loss. The investment had a market value of 580. On 2022, the company sold the investment for 630. Answer is Delta Charlie. Delta Charlie. Answer is Delta. Again, selling price minus the latest or the current carrying amount. And the current carrying amount is 580. So 630 minus 580, that's 50,000. Next, 39. How much should Hong Kong Bank report as realized gain? And the answer is Charlie. Ay wait, bali di siya sa akong given, no? Kalit sa query computer. Kaya ako ang securities kay XYA, ang nadra kay XAY. Akong balik ko ng compute times 250 minus 885. 115 is not there. Ano ba XAY na? XYA mo na siya dapat. XYA ang nahanap mo. So it should be 2,000. You change it to A na lang. So 2,000 times 250 minus 459. Ano kung mausap? Nga ako siya i-copy-paste. Basin sa formatting. Number 40. What amount of OCI should trust company disclose in its statement of comprehensive income? Answer is zero, because realized gain is reported in P&L. Realized gain, whether it's OCI, amortized cost, it's reported in P&L. And this unrealized gain, because it is P&L, it also goes to income statement. So for the OCI, there's none. 41. Bisig lahi na sa tingang orders akong PIC. Is it the same? PIC. Okay. What total amount of realized gain should PNB recognize? Answer is bravo. So you get your selling price minus the market value. Kasi may tabo sa kuan, accumulated OCI. Is this one? Is this, let me check. Wala sa dyan specify. Wala ni specify. This is profit or loss day, so there's no OCI. If this was available for sale securities, accumulated OCI goes to retained earnings. 42. Answer? For 60. What about the transaction cost? If the securities are to be sold, Victory Company would have to incur 30,000 transaction cost. Answer is bravo. When we measure under P&L, we get the fair value, not fair value less cost to sell. Next, red. How much should be reported as carrying value? These are what? OCI? And then you have transaction cost again. OCI niya na transaction cost. Answer is dapat natatos choices no gi-deduct ang transaction cost. May gamit ng pangpalibog. Answer is bravo. You only consider transaction cost upon acquisition. You add a transaction cost. Pero subsequent measurement, you focus on fair value. Unsa nga asset ang i-measure og fair value less cost to sell? Unsa nga asset ang i-measure og fair value less cost to sell? Biological asset. 12. Asian Bank acquired the portfolio of equity securities to OCI. No sales occurred in 2021 and 2022. What is the carrying value of the securities? Simply have to add, no? Answer is delta. Next, 45. PICU, same. Okay. What is the carrying amount of the securities? Carrying of the securities is, we add all market value. Answer is delta. Answer for the next one is pila. Alpha. Why alpha? OCI. That's good. Nice catch. Sa equity securities, dili kay siya ingana ka problematic. Magbantay lang yun. Okay, this one, debit balance in the fair value adjustment. It's the same as before. By what amount the equity securities decreased during 2021? So basically, you have to compute the market value pag December 31, 2020, and then compare it with December 31, 2021. Answer is delta. And follow-up question, what amount of unrealized loss? Zero gyapon? Zero gyapon? You compare your answers sa delta with this one. Or actually, mas better pa if kanina lang diretso. No? What's the answer? Answer is gain or loss. It's given. Unrealized loss of 625,000. So if it's OCI, especially if dagan ng years, it's easier to just compare the cost with the market value. But if inyong gi-compare ang katong past market value and the current market value, you can still do that and then you consider the 125,000 nga debit balance. It's easier to have the cost in the market value. Next is 49. $85 per share. Answer is bravo. Number 50, unrealized gain transferred to retained earnings. Okay. Answer is to retained earnings. Answer is, how'd you get bravo? 90? 90 minus 80 minus. Why 18? Yes. Which is? Okay, I get what. When you say what amount of unrealized gain or loss that should be transferred to retained earnings, referring to the portion of the accumulated OCI na mo transfer sa RE. That means the portion of accumulated OCI pertaining to those which are sold. So that's 90 minus 80, that's correct, but you multiply it with 42,000. Okay, unya pa man na mo transfer sa RE if the investment or the security has been sold already. So, kato inyong answer would be sa number 51. For the remaining. Manang nakabutang sa 51 is still unrealized. For the mabaligya. So, the answer for number 51 is bravo, 180. That's correct. Number, okay, 52. Based on the problem, the bonds were issued at a discount. Very good. As you can see, this is the face value. Ang pinaka-last. If it's a term bond, it would be face value. This is the present value. Since the present value is lower than the face value, it is a discount. Next question is, what amortization method is used? What's this? This is Charlie, effective interest method. Have you discussed straight line method ng amortization? Okay. Simply divide it by number of years or months as the case may be. Next is, what is the nominal rate? Nominal rate is, how'd you get 11%? 55 divided by the principal na 500. That's correct. Next, number 56 question is, what is the effective interest rate? How do you compute the effective interest rate? How do you compute the effective interest rate? Interest should not be interest expense. It should be interest income divided by the present value, the carrying value. No? Pwede ka 56,610 divided by 471,747 or 56,803 divided by 473,357, 8 at any stage. It will give you 12%. Again, pwede ni i-divide kani 56 divided by 47, 56,803 divided by this, and should give you 12%. And the last one is, on the basis of the schedule of payments, what is the journal entry to record the issuance of the bonds? So, morning amount. Let's say journal entry for 747-28253. This is bonds payable naman there. Kaning nga problem? Okay. Okay, part ka, Dr. D, man ang financial liabilities. Wait, so, the answer for this one is, this is bonds payable naman gid. Wala ko na-notice, research na kung bonds na good. Answer is, delta. No? Equal to the fair value, discount in the bonds. So, we'll skip mga bonds issued. So, this is bonds as well. Add it as a purchase. Can I purchase? This is bond investment. 59. Akong skip pa ng issued ha kay. Manang mag-discuss. 59. US company purchased 4,000 of the 1,000 face value 10% bonds of Bell for 4,400, which includes accrued interest of 100K. Mature January 1, 2018, and then pay semi-annual January and July. Straight line method. What is the carrying amount of the bonds in December 31? Now this is easy, kay. Straight line. Answer is bravo, that's correct. Next is Pizza Hut. Purchased. Sige, ganita kay purchase na set. What should Gent report as gain on sale of bonds? Answer is, it's not what I given a face value, but it's mentioned at a discount of 100. You can presume any amount. If you want, let's have 1 million. Answer is bravo. So basically that's 100 plus 140. Discount plus the premium, a total of 240. Yeah, amortized naman by 20,000. What's left is 220. And then 35, next is issued. We'll skip this. Issued, purchase. Let's have 64. What should be recognized as gain on sale? Answer. Answer is Charlie. Okay, so first, again, if question is realized, this is realized gain. Compute for the selling price. Selling price is given, 3,920. So, ang problema na to is the current carrying amount. How do we compute the current carrying amount? So, first, we have to amortize and then sell only 4K out of the total 8,000. So, half. So, yung current carrying amount is 7,800. We amortize only for 2 months. So, if we are to prepare our amortization table, di ba, natay date, atong payment would have 8 million times 9%, that is 720,000, no, for the payment. For the interest income, that would be 7,800 times 10%, that is 780,000. So 780,000 minus 720,000, amortization is 60,000. But that's annual. We only amortize for 2 months. So 60,000 divided times, 60,000 times 2 over 12. That's how much? How much? 10,000. So that's the only amount we add sa atong carrying amount. So 7,800 plus 10,000 will have 7,810,000. Divided by, kaya ang 7,810,000, that's for the whole 8,000 worth of bonds. What we're selling is only 4K or half. 7,810,000 divided by 2 is 3,905,000. You compare it with this, we get 15,000 gain. Claro? I think ang sayop is wala na times 2 over 12. Wala times 2 over 12. So, man ang problema ng basta i-purchase or i-sell between interest dates. Claro? Okay, question? We'll proceed? We'll proceed with 65. Can I purchase na sa purchase? We'll stick with purchase. Okay, this is bond investment. Gen Company purchased bonds at this. We're done with this. This is 220. And then, ito is Mirage. Mirage kaya acquired. Mirage kaya acquired. Mirage acquired 4 million, 12% 12% face amount. 3767, so it's a discount. Interest on bonds is payable on December 31. Annual. And matures on January 1, 2026. 2022, 2023, 2024, 2025. 4 years. Effective interest method is used. We simply amortize. 0.14. Answer is alpha. 1 year ang amortization. Next. 1 year amortization. Next. Number 67. Purchased 9% bonds. What amount should be reported as interest revenue? Now, this one's easy. Answer is delta. Present value multiplied by effective interest rate. No? Simple. 68 purchase. Okay, let's have 68. East Company purchased a long-term investment, 5 million 8% bonds for 4. Question is, interest receivable. Easy. How much? Bravo, which is 5 million times? Yeah, 4%. So don't overcomplicate things. During exams, you read the question first. So when you read the given, you can filter out mga unnecessary given. So Cambodia, purchase. Okay, let's go with Cambodia. What amount of interest income should be reported? Bravo. Stated ng 10% ha? Wala given. Charlie lang masangit. Actually, Charlie or Delta can be an answer. No? The given answer is actually Delta, but tungod ni siya kay kuha nga ng given. Now, in problems like this, nga kanabitang kuwang bang given, you can think effective greater is discount. Since your present value is 47, face value is 5 million, you know for a fact that this is a discount. If this is a discount, the effective interest rate must be higher than 10%. So you can work back asa man ang higher. 500 divided by 47, higher kaya pa no? It's 10%. So actually, alpha, Charlie, and delta can be an answer. This is incomplete. So, but the answer given is delta. Di ba siya compute? Makompute man siguro ni. Kinsa na i-kuan cycle. Di ko kay ba mo gamit ano yung calculate. Kinsa na cycle. Pwede kang borrow. Dili ko ba mo gamit, sorry. Kana, sorry. Let me try ha. This is annual. Pila ka years kay? 4 years, negative 4. Nag-loading pang calculate. You can solve this, but you need calculate this. You try this. Ako lang isuwat ha. Kani nga formula. So for x. Sound ka dando pagka. In Valik's nga book, we have this process called interpolation. Basically, imong kuhaon ang upper or lower, and then you try to estimate the present value. Katong na-cycle, na-solve din niya. Trial and error. Now, if magawas ni sa exam, ni sa exam, I actually would rather suggest nga you try, di ba, we've tested sa A, sa C, ug sa D. Si C kay 11%, si D kay mga 12%. No? Let's focus lang sa 11% si C, 12% sa D. You try to compute for the present value using 5 million as the face value, 10% as the stated interest, and then 12% as the effective interest. You try to check if you can get 47. Work back ba? So, I know it's hard to do this because so you can have this. As a it's quite difficult like to use without the cycle. Or again, you can estimate, you can work back. You try to compute for the present value using the available data. So we have determined nga if we use this 517 divided by 4.7 million, this is 11%, right? Delta is 11.59, I think. 11.97. So round off to 12%. So what you're going to do if you have a problem like this and then you don't have a cycle, you can compute for the market price of the bond using 12% nga interest rate and 10%. If dili accurate, you try 11% and 10%. So let's try first ang 12%. No? Pilay PV sa principal. PV sa principal using 12% at 4 years is? Yung ko pang gamit lagyan eh. Atra. $3,177,590. And then PV of interest payment. Which is times 500K, diba? 1,518,675. And then we add. That's how you compute the market price of the bondsman. Is equal to 4,696,265, which is closer to 47. You can try the 11% as well. Yeah, but the closer, kani mo kung 470 ya, kani. Wait asa na tong cursor? Kani. Giround off mo gani siya. Most likely giround off ni. So, if you're going to try 11%, pila mo gawas na market price? Let me try ha. If we choose 11%, the present value would be 4,844,877. So this one is closer. Now this would have been easy if you have this. You know? Okay, you can state out the formula, replace the effective interest with x, and then the solve function. Naman na siya shift solve. Oh yeah, elimination process. You can have the basic out. Okay? Let's continue. Any questions? Now, again basig magawas na sa exam, so you have to know how to compute. Na kanindot lang is for MCQ, you have limited answers naman. So you can, test which one is closer to the present value. Mas dali na siya if makagamit mo ng solve function. Wait, kanina nabata na skipan? 70. Okay, 70. What amount should be reported as interest? This one's easy. Interest receivable. Answer is delta. Next, this one paid. So this is, okay, this is purchase. What is the carrying amount of the bond end of the year? Answer is Charlie. That's correct. Take note, this is 6 months. So from July to December. So don't forget. Next number is for 72. What is the carrying amount of bond investment? So muna siya, you have to compute for the 946. Answer is Alpha, Charlie, or Alpha, or Charlie. Alpha, Charlie. Answer is Alpha. Sa nag-answer Charlie, wala madidak ang including accrued interest. So you have to take out the 40K. Only 906,000. Klaro? If there's accrued interest again, bantay-bantay ganyan. Next is this one. Purchased serial bonds. Ano lang kung pagawa sa serial bonds. But if you're to answer this, the bonds. What's the question? What is the carrying amount? Arabian. It's a. Wala question lagi no? Most likely compute for the purchase price. You check. I think this is the market price of the bond. Market price of the bond on January 1. Sorry. Market price of the bond January 1 daw. GP sa years. Hindi masolve eh. Pero 3 million man, 1 million. 3 years? Yeah, 3 years. That's right. Ano man? Tuloy. The answer given is alpha. No, this is definitely 3 years. Na solve na ko but na rounding error. Okay, one ako na ground off of PV factor. Anyway, I will not give a serial bond the question, but just so you know the formula to get the market price of the serial bond, it's still the present value of the principal plus present value of interest. But because ang iyang principal is paid in installment, in getting the present value of the principal, you have to use ordinary annuity. So 10% for 3 years multiplied by 1 million. That's the present value of the principal. Yeah, ano lang, sige. You try to get the PV factor of 10% for 3 years. How much? 0.75? Yeah, multiplied by 1 million. Wait, 0.75 ordinary annuity? Basic lump sum na. 2.49. 2.49 times 1 million, 2,490,000. Okay, that's the PV of the principal. And then PV of interest. Now, this is quite tricky. Okay, we are so used with the interest being constant, right? In a serial bonds, ang imong PV magkagamay og 1 million per year. So you would have to get the interest per year as adjusted. So that would be sa first year 3 million times 12% divided by 1.1. Sa second year 2 million times 12% divided by 1.1 squared. Sa third year 1 million times 12% divided by 1.1 cube. So it's quite tricky, diba? But that's how you solve it. Anyway, I will not give a question concerning serial bonds. But that's how you would solve it. You still should know it because in the future in IRC you will have to use it. But that's how you would solve it. Claro? Let's proceed with this one. Purchase. This is York. Okay. Compute for the interest income. Oh, sige, compute for this. Take note, including 40K. Including 40K. So answer is Charlie. So you deduct the 40K, and then this is 6 months, July to December, divided by 2. Next, 75. What is the carrying amount of the investment? So 45.3. Answer is nasa choices? Naa. It's alpha. Don't forget to deduct the accrued interest. 76. Kaya mo rutan eh. If mabot ang 12, we have to take our lunch and then I'll give you the answers. 76 purchased. Oh, sige, kanina kay purchased. Question is, what is the market price of the bonds? Or round off to 3 decimal places. Oh, sobra pa yung 0. 5 million na ha, di na 50. 5 million. 10 years. So, ka 10 mong sigpisit-pislit divided by. May nakaninda tani nga kalkyo. Hopefully sa board i-allow na nagbalik. Gawa mo nga nag-allow before. Years niya semi-annual ha? 10 years niya semi-annual. So kabahin hindi mo magpisilit. Answer is round of the 3 decimal places. Or say closer, son. Answer for 76 is okay. EGD, effective greater discount. Asa man sa choices ang naay discount. Delta. The rest are premium. Sige. What is the carrying amount of the bond on December 31? Kapila mag-amortize? Kaduha. Kay semi-annual. Semi-annual, so mag-amortize ka half sa year, amortize na sa next year. End of the year, half sa year, and then end of the year. So answer would be answer is alpha. Charlie if Dili mag-round off. Do you know, are you familiar with Attorney Ang? Wendell Ang? Or wala siya nag-teach ng pagsud niya. He gave, during a review sa IRC before, he gave us this exam. Na instruction nga round off to 3 decimal places. Ang choices, if wadyo ka nag-round off, magawas ang answer. If nag-round off kag 3 decimal places, magawas ang answer. Of course, sa magdali-dali ta, di na ta mag-round off, especially for calculators like this. No. Kung kanimong good, mapugos ka round off kay, you would have to write it down. Now, ang correct answer, although ang pinaka-accurate is the one nga di ka mag-round off, but since you're not following instruction, you're marked wrong. Preyani, the most accurate one is Charlie. It's not even that accurate kaya ang delta mismo is rounded off naman. But Charlie is more accurate than alpha. But because alpha aligns with the instruction round off to 3 decimal places, then Charlie should be, alpha should be the correct answer. Saan ni? Taasan eh. But this is a good question. What is the total interest and dividend income? Pagawas ko sa exam. Supporting record, interest days, January, July, Mayon. Uses the income approach to record the purchase of the bonds with accrued interest during 2013, 2012. What is the total interest and dividend income? I'll give the answer. Okay, happy to said content. The answer for that is, this one is Charlie. But this is solvable. It just takes time, but solvable man eh. Yeah, 79 is alpha. Charlie and then alpha. This is actually solvable. Next is, this is Bravo. Carrying amount of the remaining trading securities is Delta 726,125. And last one, loss, alpha. I'll give the answers for the rest. What's this? Russia company. Where's Russia? Russia. Asan yung dapit? So the number 18, 83. Okay, for 83, market price of the bonds. Again, you can still solve this one. That's Charlie. Carrying amount of the bonds at year end, that is Charlie as well. And then for 85, this is available for sale securities. What amount should be reported as investment for available for sale securities December 31, 2012? Now, money question. Which one should you follow? The fair value or the amortized cost? Oh, asam to. Third day. Fair value. What's the question? 2012. Fair value or the amortized cost? Should be fair value. So 1,075,000. But you still have to take the time. You still have to prepare the amortization table. So next is what amount of unrealized gain should be included in OCI sa 2012? Sige. How would you compute for that? Morning. Actually, kasabot ko na graduate na ko. Nag-graduate na sa din yung kasabot. Now, so this is the thing with bond investment in OCI. Libog yun na. So, rule is, every reporting period, this is what you present. It's always at fair value. But you still have to prepare an amortization table disregarding the fair value. So how do we compute then the OCI? Ang OCI sa first year is the difference between this and this. Pila OCI sa first year? You check. 1065 minus 1070893. Unrealized loss of 5,893. That's your ending balance. No? Again, unrealized loss of 5,893. Take note. Next, sa 2012, pila na may difference? 1075000 minus 1054438. Pila? 20,562. This should be your ending balance. Now, nakay beginning balance nga negative. So, para mahimo siyang positive nga 20,562, you need to record a gain of 26,455. Okay? Ang difference between this and this is your ending balance sa OCI. That should be presented in the equity section. So, what you recognize as other comprehensive income in the income statement is the change from the beginning balance nga negative to the ending balance nga 20,562. So, that is alpha. 87, what amount of unrealized loss should be shown as component of other comprehensive income in 2013? So, 2013, we do the same thing. No? We compare, pila mo na, 1056, 500 minus 1037, 610. So, we have 18,890. But pila man to ang ato ang balance before? Pila to atong balance before? 20. Di ba man itong balance? Man itong i-recognize sa income statement. But ang balance sa balance sheet is 20,562. So to reduce 20,562 to 18,890, pila itong unrealized loss dapat? $1,000? Should be delta. Anong kuha nga naman yun? 2013. Ah, 19,340 day. Minus 20,562. Answer is delta 1,222. And then for 71, same gihapon, no? So this is Bravo. 87 is delta. Again, delta is computed as the difference between 20,562 and pila ganito? 19,340. And for 2014, same thing. You compare the answer for number 88 is 10,990 delta. 10,982. Let's check. Sorry, this is alpha 8,350. What's the number? 88 unrealized loss in 2014, di ba? This is alpha 8,350. And then last is pilay unrealized gain. Take note sa changes in equity. So changes in equity, just compare this and this. Pilay difference. 1030 minus 1019,018. Syntax error. 10,982. So this is 10,009. Should be 10,982. $2014. Di ba? 10,982? 1,030,000, 1,019,018. Answer should be 10,982. But this is the closest answer. So delta. So for 90, the answer for number 90 is this one is alpha. 91 is Charlie. Okay. So you practice this one. Nana siya sila ba pattern again rule ani. You always present if pangutanon mo ending balance, you always look at the fair value. If pangutanon mo pila interest income, then you look at the amortization table. Completely disregarding the fair value, just amortization table. Ang lisod ra gyud kung pila ang OCI. The difference between the fair value and the amortized cost should be the accumulated OCI for each year. Mao na ang makita sa equity section of your balance sheet or in the statement of changes in equity. The OCI that will be presented in the other comprehensive income, sa income statement, is the difference between the beginning accumulated OCI and the ending accumulated OCI. So, took me after graduation to get that. Na? At least you know na. This is the hardest portion, I believe, sa PFRS 9 when I was a student. Lucky for me, wala inigaw sa board exam. Okay, so we'll have a break. Then we'll continue 1 o'clock. Okay, 11:30 pa man. So you have 1 hour and 30 minutes na break. We'll continue 1 o'clock. Sige. I think ang examiner ninyo, ano, you check sa other sources. Yes. As to the rules, of course, ang handout. Wala i-discuss, not necessarily, for example, ang CPA. Other than um, they can't say nga dili sa familiar kay trying mo gawa sa problem nga wala ito sa handouts. It will have the same concept. Same concept. So, same concept. So, wala yung concept na outside.
Oh, dili. Gahapon pa na. Bakit ang angle daw?
Iset na lang sa Ardentia ba, no?
Ambot, gisugo ako. Gisugo ako. Gisugo ako. Investment ka naman. It's still alive. Lagi mga pressure. Ready na kasi? No. Acting.
Na ba to ang kon? Katong non-current asset held for sale in discontinued operations sa list? We'll discuss investment in associate, investment properties. I just included this, but actually this is quite easy, so maybe we won't have to extensively discuss this. Para by Monday, we'll only have the lease and I believe PPE. Wait, let me check. Lease, yes, lease Monday and PPE together with borrowing cost government grant. Okay, so let's have investment in associate, other investments, investment in associate, investment properties. And as an addition, this is PFRS 5. Let's start with investment in associate. This is governed by PAS 28. It's when the investor owns, or technically, the investor has significant influence over the operating and financing policies over the associate, over the investee. And there's this presumption if the investor owns 20% or more, then there's significant influence. As I've said earlier this morning, even if the ownership does not exceed 20%, but you have other circumstances, being a member of the board, participation in the policy-making process, you can still have you still have to apply past 28, even if less than 20% ang ownership. Now, when do you know there's a loss of significant influence? When, in the context of problems, when ownership is reduced less than 20%. The method used is equity method, which means that the initial investment is recognized at cost, acquisition cost plus transaction cost, and it is increased if the investee has an income. So for every year end, the investee will calculate his share. The investor will calculate his share of the investor will calculate his profit, and the investor will calculate his share of the investee's profit. So the entry would be to debit the investment account, credit investment income. And if na loss, still debit the investment income account or investment loss or investment income credit the investment account. So more reduce more siya capital account nga if ang entity na ay income, you debit it. If ang associate na ay loss, you credit. Now, what if mag-straight pila ka years nga nagsigi og loss? Would it be possible to have a negative balance? Kay nagsige kag deduct sa share nimo sa investee's profit? No. Once it reaches zero, it remains at zero. Dili ka mabot og negative. But if after nagsigig zero, mubalik na sa tiyag profit, you cannot immediately recognize the investment income until katong mga unrecognized losses nimo will be reversed. For example, imong investment balance is already at zero. Unya, ang imong associate na ay 1 million nga loss and you own 20%. So, dapat mag-recognize ang negative 20,000. But zero naman imong investment account, you don't recognize anything. If the next year na ay income nga 1 million gihapon, the entity or the investor cannot recognize the 20,000 share nga income. Kay i-offset pa man niya ang last year's negative. Okay? So, distributions or dividends are treated as withdrawals. Mura siya withdrawal of investment. It is treated as a reduction of the investment. And the investment, actually, it must be in ordinary shares or voting shares. In most cases, preference shares. They have preference as to assets or dividends, you know. Makadawat sila una when it comes to dividends, or upon liquidation, makadawat sila una, but in most cases, they don't have any voting powers. And voting powers are the common stocks, ordinary shareholders. If the investor has significant influence, the investor is said to be an associate. And it's classified as non-current asset. So if the investor pays more than the carrying amount of the net assets acquired, the difference is known as excess over cost. This one. Wait, I think na makita na ako dali ganiya. Wala din lagi butang. No? Anyway, wala din dali. So if the cost or the transaction price paid for is more than the cost of the assets, yang relative portion kipalit, it's classified as excess of cost over carrying amount, and it will be treated or applied to the undervaluation of the invested assets such as building, land, and inventory, meaning, in other words, more sagi adjust to fair value ang assets, net assets to be precise, of the associate, and if there still exists, the excess goes to goodwill. However, for investors' in the investor's perspective, it's not necessary for us to record the fair value of those assets and net assets. We just debit the investment account equal to transaction cost and credit cash. That's it. Pero, again, if there are excess over costs, you have to take note of it. Okay, those excess will later be amortized. Kani, share in excess of cost. This is amortization of excess. So excess of net fair value over cost, this will be if the fair value of the investee's net asset acquired is greater than the transaction cost, I think it would be better to illustrate this. Wait a second. Okay, so you have the cost or the transaction cost. If it's greater than the fair value na kay maguna sa atong first na akong i-discuss. Transaction cost greater than the carrying amount of the assets acquired. Like the total net assets multiplied by 20% if you own 20%. The transaction cost is greater, the excess is applied to the undervaluation of the assets or the fair value, and additional excess goes to goodwill. In other words, if the transaction cost is greater than the fair value of the net assets acquired, excess goes to goodwill. Okay? So muna first. Okay, first. Now next. What if bali? What if the fair value is greater than the transaction cost? The excess goes to, written here, provides that any excess of the investor's share in the net fair value of the associates' identifiable assets and liabilities over the cost of investment is recognized as income. Okay, as gain, income. Investee with heavy losses, we have discussed this, you do not recognize anything. Now for investment property, so investment property is very precise. It's land or building or any part thereof that is held by the owner or by the lessee under the finance lease to earn rentals or for capital appreciation. So the main purpose is to earn rentals and capital appreciation. Sir, what if service vehicle, non-current asset, a fixed asset, give pa rent to earn rentals? Does it mean past 40 siya? No. Why? Because it's specific to land and building, land or building, or any portion sa land or portion sa building. So it applies if the owner or the entity is the beneficial owner. If you literally own it, or under the new lease, if you own a property under finance lease, you're the beneficial owner. So excluded those for use in production or supply of goods or services. How do you record those type of assets, land and building, used in production or supply of goods or services? Under pass 16. For administrative purposes, pass 16 gihapon. For sale in the ordinary course of business, 2. So you have their examples. Land held for long-term capital appreciation. Land held for currently undetermined use. What about building held for currently undetermined use? Is it investment property? Yes? No. Ano naman? What happens to the value of the land as time progresses? Mo-appreciate. So, even if kahibaw si entity unsay buhaton sa land, the value of the land appreciates. So, mo-fall ka po siya sa past 40. Pero, past 41. Pero, if we're talking about building, so may tabo sa value sa building, mo depreciate. That's why wala appeal ang building. Wala appeal ang building ha, currently undetermined use. Okay? Building owned by the reporting entity, leased out under operating lease, included. What about building owned by the reporting entity, leased out under finance lease? Appeal? Dili, because under IFRS 17, lease out under finance lease is essentially a transfer out of the property. It's a transfer of property. Building that is vacant but is held to be leased out under an operating lease. Property that is being constructed or developed for future as investment property. This is actually a new one. No? Before, a rule before, if it's still under construction, it's past 16. Nya, mahuma na gani, ara na siya i-reclassify to investment property. So, past 16 siya so good at cost, and then mahuma na siya, i-reclassify na siya investment property. But now, we have this amendment nga even under construction, if it is purposely built for rentals, then it can be an investment property. Okay, what if partly leased out niya, partly gigamit sa operations? How do we deal with it? So first concern you have to address is whether the units, mga rooms ba, can be sold or leased out separately. If they can, then account for them separately. Kaya under the standard, pwede man portions of the building if can be leased out or sold separately. Pero, let's just like exactly this room, no? Gipa-lease out ang katunga sa chairs, the rest is used by San Carlos. Now, because it cannot be sold or leased out separately, we go to an entity shall account for the, they are treated as investment property if only an insignificant portion is used under PAS 16. Okay? Parehani, kung mas dako ang gigamit for investment property, then that's for investment property. If significant portion is being used for administrative purposes, for supply of goods or services, then it would be PPA. Again, this is only applicable if the units kay dili siya capable of being leased out or sold separately, meaning di siya identifiable. Property leased to an affiliate. Okay. So, an affiliate, for example, is parent of subsidiary. No? It's when the investor invests, let's just say 90%. Okay. 50% plus one share and more than 50%. For example purposes, 90%. Under the rules, under IFRS 10, these two entities must present only one FS. We call it consolidated FS. Because under the standards, they are treated as only one entity. Okay? So, kanang mga, example, kaning mga Aboitis, no? Na si Aboitis Powers, Aboitis Infra, na sila mga companies, na sila parent, the holding company. When they prepare financial statement, they will prepare one. Mag-prepare na sila individually and then later si parent mag-consolidate. Okay? So, what if si parent nagpaabang og property building kang subsidiary, no, operating lease? Would that be classified as investment property? It depends. If we're looking at the separate financial statement of the parent, then that is indeed investment property. However, if you prepare a consolidated financial statement, they are combined. Of course, you cannot, rent to your own self. That's why if it's consolidated, it is classified as PAS 16. It's classified as PAS 16. So how do we measure? Measure initially at cost plus transaction cost. Subsequent recognition, fair value. There's the option of cost model if the fair value is not readily identifiable. But once it becomes identifiable, you switch to fair value. It's the rule. So fair value model. So you have here reclassification from investment property or owner-occupied property or inventory na cost basis to investment property, owner-occupied property, inventory under still cost basis, so no difference. So basically, they are carried using the same accounting measurement. If your investment property was measured at fair value and it transfers to owner-occupied or inventory, carried at fair value. At cost, carried at cost. The fair value of the investment property becomes the cost of the owner-occupied or inventory. If it's an owner-occupied property carried at cost and then reclassified to investment property, we're talking about purposes of the assets. The difference between the cost and the fair value is treated as revaluation surplus. If we're talking about inventory carried at LCNRV, and then reclassified to investment property at fair value, the difference between the LCNRV and the fair value is gain or loss reported in profit or loss. And lastly, this is under construction. Manong gingon. If the investment property is still under construction, it's very difficult to determine the fair value. That's why we record it at cost. And then when it's finished, when you can now identify the fair value, you restate. No? You restate the value. So from cost to fair value, the difference is reported under P&L. And for PFRS 5, so PFRS 5 covers two items, two topics. Non-current asset held for sale and discontinued operations. So basically, what happens is, you have a company nga gi-cut off niya iyang major line of business. For example, Apple. If Apple decides to stop producing iPhones, that falls under PFRS 5. Gi-discontinue niya ang whole operation, a major component of an entity. Nya, unsa man nimo itong mga equipment nga gamit pagbuhat og cellphone, ang building gamit pagbuhat og cellphone, ang storage, you would have to sell it as well. That's why we have non-current asset held for sale. So this is a result of discontinuance of operations. So non-current asset, everything that is not current is non-current. That's what we call residual definition. Under past one, it's very specific. Those acquired for trading, that's current. Those acquired with a maturity date of less than of 1 year from balance sheet date, that's current. Katong within the normal operating cycle, that's current even if longer than 1 year, and cash. So everything that's not in those lists, sa 4, considered non-current. Disposal group is a group of assets and liabilities. Patong gingon nga, if you decide to discontinue an operation, everything attached to it might be discontinued. And so you have that disposal group. So when do you classify it as held for sale? If the carrying amount will be recovered principally through sale rather than continuing use. Sa asset, there are only 2 ways for you to benefit from an asset, like this. Kani. What are 2 ways for you to benefit from your calculators? Either you use your calculators for you to study, succeed eventually, or you sell it. Same thing with laptops, shirts, cell phones, everything. You can either use it or sell it. That's why when we determine impairment loss, the recoverable amount is deemed to be whichever is higher between value in use or fair value less cost to sell. Use it or sell it. Same thing. If you can no longer recover the carrying amount through using, then you sell. So you classify it as non-current asset held for sale. So there are 2 strict conditions. It must be available for immediate sale, and the sale must be highly probable. So when can we say it's highly probable? You have there, management must be committed to a plan, so on and so forth. You just read through it. Okay, so measurement, we measure non-current asset held for sale, whichever is slower between the carrying amount and the fair value less cost of disposal. If the carrying amount is lower, there's nothing to do. You just reclassify. So instead of you debit equipment, for example, it's equipment held for sale, credit equipment. Simple reclassification, same amount, nothing more. Problema is, what if mas gamay si fair value? If mas gamay si fair value, same thing, but you would have to record impairment loss. Okay, impairment loss. Now, what happens when you classify a non-current asset as held for sale? Number one, you stop the depreciation. Why? Because you're not using, or the purpose for the asset is no longer for use. So you stop depreciation. Sir, what if na service vehicle ang company and it decides to abandon it, kay guba na kayo, naradra nag-parking? Will it be classified as held for sale? No. Okay? Oh, what if permanent na yun? Permanent abandonment. Will it be classified as held for sale? Still no. What if mingon si management, ara lang na, pero if naay mo palit, ato'y baligya. Will it be classified as held for sale? No. Because the sale must be highly probable. It's expected to be within 1 year. Management must be committed to a plan to sell, active location of buyers, so on and so forth. Okay. Asset measured using revaluation model. So you simply revalue prior to reclassification. So take note, non-current asset held for sale is presented as current. That's clear. Non-current asset held for sale, because the sale is expected to occur within 1 year, it's presented as current. Not only that, but the disposal group as well. Mga related liabilities, related assets, they are presented as current as well. So to continue, as I've said, PFRS 5 talks about discontinued operations. So if we talk about Apple, if Apple decides to discontinue the whole iPhones, that is discontinued operation. Pero what if wala lang sila ni-produce o iPhone 8? Kaya ang ilang i-produce mga latest iPhones na. Will it be considered as discontinued operation? The answer is no. It must be a major line of business or a geographical area of operation. Okay? It's part of single coordinated plan to dispose of a separate major line of business. Or it's a subsidiary acquired with a view of resale. So it must be a component of an entity. So when do you consider it as discontinued operation? When the entity has actually disposed of the operation or it meets the criteria of non-current asset held for sale. So the thing with discontinued operation, when you prepare your financial statements, it's prepared under going concern principle. The presumption that the business will continue to exist in the foreseeable future. That's why your financial statement or balance sheet, at least it says balance sheet as of December 31. It's expected to continue. In the same way, your income statement as well. No? Income statement for the period of 2026. Those items from sales, cost of goods sold, interest, whatever, they are operations or income or loss from continuing operations. Continuing. So if you have discontinued operation, si Apple stop siya production mid-year, namgyapon siya sales and expenses from January 1 to July 1. So where man na i-report? Sa income statement. But it will be separated from the continuing operations. And sa continuing operations, you normally have sales, cost of goods sold, na breakdown. Sa discontinued, which is one line, you just say income or loss from discontinued operation. Only one amount, net of tax. The breakdown is presented in the notes to financial statement. Okay, so let's solve and discuss other topics along the way. We'll start with number 1. It's a group of assets. Answer is alpha. Okay. Next. Number 2. Held for sale. Answer is alpha as well. Number 3. Which one is incorrect? Delta should be 1 year. Number 4, entity shall measure a non-current asset or disposal group classified as held for sale at Charlie. 5, which of the statement is incorrect? Which is incorrect? Letter? What makes delta wrong? That's right. You stop the depreciation. 6. Fair value less cost to sell is lower. Bravo. 7. What is the treatment of any gain on subsequent increase in fair value less cost to sell? No, this applies to impairment loss. Answer is Charlie. So you should not exceed the from the carrying amount had there been no impairment loss in the first place. 8. Abandoned non-current asset. Bravo. 9. Non-current asset is classified as current. 10. In order for a non-current asset to be classified as held for sale, must be highly probable. So which one? Answer is delta. Delta. I copied this question from Valix, I think. 11, but when it comes to PFRS 5, yeah. 11, entity classified non-current asset accounted for under cost model as held for sale. Yeah, wala may offer, the entity decided not to sell the asset. In accordance with PFRS 5, the asset shall be measured. Answer is Charlie. The lower of its carrying amount had there been no reclassification as held for sale or the recoverable amount. 12. Number 12. Okay, got number 12. Answer is alpha. A component. This is related to discontinued operation. A component of an entity. 13. What is the presentation of the results from discontinued operations? Entity shall disclose a single amount net of tax. Okay, net of tax. 14, which is correct. Letter Letter D, Delta. 15, Company B owns hotel resort, which includes a casino, separate building that is part of the premises of the entire hotel resort. Its patrons would be largely limited to tourists and non-resident visitors only. The owner operates the hotel and other facilities on the hotel resort, with an exception of the casino, which can be sold or leased out under an operating lease. The casino will be leased to an independent operator. On December 31, the following are the relevant information for the purpose of measuring the above asset. What amount should be presented as investment property? Answer is letter A, which is the casino, which is being leased out to Company B, and it is capable of determination. 16. Company M owns a hotel company. Fellow subsidiary of Company M manages a chain of hotel, receives management's fee for operating its chain except for the hotel owned by Company M. Company M's owned hotel is leased to Company N for 3M a month for a period of 6 years. Any profit or loss from operating Company M's hotel rests with Company N. The hotel that Company M owns has an estimated useful life 40 years, carrying value is 85 million, and value in use of 82 million. How should Company M report the property in its balance sheet? Will you consider it as an investment property or PPE? As PPE. PPE. So if PPE, Charlie or Delta? Delta or Charlie? It will be carried at cost. But that value in use being 82 million means there has been an impairment loss. So answer would be Charlie. 17. Jelly Company acquired a real property for speculation with the intention of selling it at a higher price. Acquired at cash price of 3 million. Unpaid property tax is 100K. Nabudget transaction cost 20K, broker's fee, registration of 35. What's the investment cost? 3 million. Ang 100 apel? Ang realty tax? Apel? Answer is yes. And broker's fee? Definitely. And the registration cost. So the answer is alpha. Now, careful with realty taxes. This is also true. We will discuss this in PPA. Unpaid realty taxes that is assumed by the buyer part sa cost. But after niya na-acquire, subsequent realty taxes kay expenses, taxes and licenses. Claro? Kani appeal because you cannot buy the property without paying that unpaid realty taxes. That's true even for PPE. Pa 16. 18. Chong Company has an investment property acquired 4 million. Depreciation of 100,000 is recognized annually and periodic continuing maintenance cost of 10K per year, as well as property tax of 10K. What should be the carrying amount at the end of the year? Answer is Charlie. 19. Silent Corporation. Fair market value of the property on December 31, 2015 is 2.6. On 2015, it's 2.8. On the date of transfer, what amount should the inventory be valued? So investment property to inventory. Which one should we use? Answer is category classification ganiya. If fair value sa investment property transferred sa inventory or a PPE, the fair value is deemed the cost. Pila ang latest fair value? 2.8. So cost would be 2.8. 20. Investment property. Okay, the question is what amount of gain or loss on transfer should be recognized? So you have an investment property with 5 million using cost model. And then, pag 2030, as of December 31, 2013, it has a carrying value of 4.9, fair value 5.1. The company decided to transfer the investment property. Yakoy o January 2. I think the January 2 should be 2030. And yeah, on the date of transfer, the company decided to transfer the investment property to owner occupied. Still under cost. So pila gain or loss? Cost to cost. Answer is no gain or loss. Okay, cost siya and then cost. You simply debit the asset, credit asset held for sale. Nothing more, nothing less. But sayop ni. Gi-acquire siya January 2. Yan na siya fair value pag 31. This one, January 2, 2014, Mighty Company converted its owner-occupied property to investment property. The carrying value is 4 million. Assuming the fair value is 3.8, what should be recognized? 200,000 nga loss. But what kind of loss? Answer is alpha. 22. Assuming the fair value was 4.4, so 400,000 more. How do you recognize the 400,000? Katul, profit or loss makato. Kani? Answer is bravo. Revaluation. 23. On December 31, 2011, Condor Company committed to a plan to sell a manufacturing facility in its present condition. After a firm purchase commitment is obtained, the buyer's inspection of the property identifies environmental damages not previously known to exist. Condor Company is required by the buyer to make good of the damage, and satisfactory rectification of the damage is highly probable. December 31, 2011, the carrying amount is 4M, fair market value is 3.6. Condor Company should properly report this manufacturing facility as dili na include as PPE, i-include among PPE at 3M, 3.6 dapat din sa C. Or Charlie should be reported as non-current asset held for disposal valued at 3.6. Answer is delta. The answer is delta. It will still be classified as held for sale. 24. Should classify the building at what? Answer is PPE. What amount? What amount? Four or 5 million? Answer is, what's the implications of fair value being 4 or 5? Impairment. So you record that 4.5. 25. January 2, 2022, Iron Company acquired as a long-term investment for 700,000, 20% share investment in associate. When the net asset was 3.5, Iron can exercise significant influence. For the year ended 2022, Calcium reported net income of 360, declared and paid 100. How much investment income from this investment should Iron report? How much? Answer is Charlie? Charlie or Bravo? Charlie. This 360,000 times 20%. 26. I'm sorry. 26. On January 2, 2014, Hope Incorporated acquired 20%. Also the exact same. Adelaide. For 700,000. The book value of the shares acquired is 600K. The excess of cost over book value was attributed to a depreciable asset which was undervalued. Peace reported net income after tax of 180,000, unrealized gain on its investment in available for sale 100K, foreign translation loss, and paid cash dividends of 60,000. How much is the carrying value of Hope's investment in Peace? So mo apply na ninyong gibuhat ang share in excess. Answer? Answer is 694,000. So don't forget nga for the excess, bantayan na ninyo ha, ang acquisition cost is 700. Ang inyong bantayan ang book value. Sometimes the problem will tell you the book value of the shares acquired is 600,000. So you just have to deduct immediately. Pero if ang given gani sa problem is the book value of the associate, you still have to multiply it by 20% before you compare it to 700,000. Kani, it's given naman, so 700 minus 600. So you have 100,000 nga valuation for under valuation for the depreciable asset. Divided by 10 years, so you have additional nga 10,000 depreciation. Next, number 27. Shall discontinue the use of equity method when? Answer would be alpha, if wala ni significant influence. By the way, if an investment in associate would be reduced such that wala na significant influence, like he owns 20% and gibaligya niya ang katunga, so 10% na lang nahibilin. Kung may tabo sa 10%, it will be reclassified to PFRS 9. That means you're going to update the cost of the investment to equal the fair value. Any increase is recognized as profit or loss. 28. When an investment ceases to be an associate, the fair value of the investment at that date when it ceases to be an associate is regarded as its fair value on initial recognition as a financial asset. Again, the fair value of the remaining interest. So i-adjust pa ninyo tong cost equal para mo equal sa yung current ka fair value. Next, 29. An entity purchase 10%. This is what you call step acquisition. So nag-una siya 10%, nya kay 10% man ang first niyang first standard gigamit is PFRS 9. And then the entity purchased additional shares na ni-equal na siya to 40%. So from PFRS 9, nahimo na siya og investment in associate. During October of the current year, the investee declared and paid cash dividend on all of the outstanding shares. How much income income from the investment should be reported. How much of the income should be reported? See, prorate 10% from January to July, and then August to December kay 40%. The share sa investment operations, is that right? Huh? The answer is bravo. Alpha would have been correct if nanay declaration before. Ang declaration October pa man. So wala pa siya income. So by the time nag-declare na, it's now under past 28. It's treated as reduction of the investment account. If nag-declare to January, you can recognize dividend income sa katong portion. Next, 30. What is the accounting treatment when the financial statements of an associate are not prepared as of the same date as the financial statement of the investor? So this is pertaining to combined financial statements. The associate shall prepare financial statement at the date as that of the investor, the accommodated investor. Next, 31, which is correct under equity method. Let's start with statement number 1. The investment in associate is initially recognized at cost. The carrying amount is increased or decreased to recognize the investor's share in the associate's earnings. True or false? That's correct. Statement 2. Adjustments to the carrying amount may also be necessary for changes in the investor's proportionate interest in the investee, arising from changes in the investee's equity that have not been recognized in investee's profit or loss. Mga OCI. Appeal? True. Katong ganyan itong gisolve. Katong nabitay 600 o 700 nga gi-amortize. Diba? If you'll notice, nato'y investment, unrealized gain on available for sale securities. Right? So, appeal. 32. 32. Okay. Which one is correct? Statement 1. Substantial or majority ownership by another investor does not necessarily preclude an investor from having significant influence. That's false. Preclude. Statement 2. If the investor holds directly or indirectly through subsidiaries less than 20% of the voting power, it is presumed that the investor does not have significant influence. Less than 20%, there's a presumption nga walay significant influence. True. Presumption, unless board of directors siya or by agreement maka-participate siya sa operating and financing policies. It's just stated in the negative. 3. If an investor holds directly or indirectly through subsidiaries 20% or more of the voting power of the investee, it is presumed that the investor does have significant influence. 20% or more is the exact opposite of statement 2. Answer is true. So letter A. Next. Number 33. Investment on associate should not be accounted for under equity method when the investor ceases to have significant influence. Is that correct? Yes. Okay, if wala siya significant influence, PFRS 9 na siya, fair value method, or pwede IFRS 3. Statement 2. When the investment is acquired and held exclusively with a view to its subsequent disposal within 12 months from acquisition. Do you use equity method? No. We classify it as non-current asset held for sale. When the associate operates under severe long-term restrictions that significantly impair its ability to transfer funds to the investor, but the investor continues to have significant influence, should you not account for it under equity method? Not, Hannah. No, you should continue with the equity method as long as there is significant influence. So, asa raman ta dili mo gamit og equity method? 1 and 2. Letter B. Kani, dili man ta mag equity method kay wala ni significant influence. Yeah, kani, this is not investment in associate. 34. If under the equity method an investor share equals or exceeds the carrying amount of an investment, 0. Which one is incorrect? The investment is reported at nil. Nil is 0. True or false? True. Additional losses are provided to the extent the investor has incurred obligations or made payments on behalf of the associate to satisfy obligation of the associate that the investor has guaranteed or otherwise committed. That's also true. If the associate subsequently reports profits, the investor resumes its share. Is that correct? Without regard to the share of net loss not previously recognized? False. Dapat makover sa to ang previously not recognized losses, like the negatives, before you recognize a share of the investment. 35. If an associate has an outstanding cumulative preferred stock, the investor computes its share, profits or losses. Which one is correct? Answer is delta. As I've said, no, walay labot ang preferred stocks kay walay voting power. Walay voting power. (36) Which statement is correct regarding the application of the equity method of accounting for investment in associate? Which is correct? Which is correct? Correct tanan? Answer is alpha. Bravo is wrong. Bali. Charlie is wrong as well kay Bali. And delta is wrong. Next, 37. On January 1, 2004, Eugene Company bought 15% of Selly Corporation. During 2004, Selly reported net income of 3 million, paid no dividends. In 2005, Selly reported net income of 5 million and paid a total amount of 10 million as dividends. Changes in fair value were insignificant during both years. In its income statement for the year ended 2005, how much should Eugene report as income from this investment? How much? Answer is alpha. Why alpha? Because there's no significant influence. And so what we treat as income are dividends, which is 15% of 10 million. Next. Maria Company purchased 30% in Venus for 5M. Venus stockholders' equity then is 10 million. The carrying amount of Venus is approximated the fair values except for land whose fair value exceeded by 4 million. Any implied goodwill has an indefinite useful life. Venus reported net income of 3M, paid dividends of 1M. Maria accounts for this investment using equity method. What amount should Maria report as investment in associate? Answer? Answer is 5,600,000. 5,600,000. It's just 5 million, and then you add net income 3 million times 30% minus dividends nga 1 million times 30%. What about the excess? Because it's non-depreciable, it will not affect the investment income. But if it was depreciable, i-deduct to ang additional depreciation from the net income before you multiply by 30%. Next. Forensic company acquired 10% in an investee for 3 million using the cost method. Pag 2023, the entity acquired a further 15% in the investee for 6,750,000. So, pila na tanan? 25? On such date, the carrying amount of the net asset of the investee was 3.6, and the fair value of the 10% interest was already 4.5 million. Sorry, the carrying amount of the net asset was 36 million. The fair value of the net asset of the investee is equal to the carrying amount, except, take note, a depreciable asset by 4 million. The investee reported net income of 8 million for 2023, paid dividends of 5 million on December 31, 2023. First question, what amount should be recognized as gain on remeasurement? This is what we call step acquisition. So initially, di ba nam siya 3 million? How do you measure the 3 million? What method? Fair value method under PFRS 9. By 2023, pila na may fair value sa iyang 10%? 4.5, no? From 3 million. So there is an increase of 1.5. So gain on remeasurement, or the gain on remeasurement of equity is alpha, 1.5. So in a step acquisition, first, you adjust the fair value of the old interest that you held. I-update sa current fair value. So now it's 4.5 plus 6,750,000. So pila na may total cost? 4.5 million plus 6,750,000. 11,250. So answer for number 40. $11,250 to na? Answer is bravo. Why? Okay, first, arita sa baba. So we have 11,250,000, correct? Representing 25% interest. So now, let's compute for the adjusted fair value of the identifiable net assets of the associate, which is 36 million. Pero naamang kay undervalued na equipment by 4 million. So what's the fair value? That is 40 million. Nya pila may gi-acquire? Pila ka percent ang gi-acquire? 25%. So 40 million times 25% is what? 10 million. So 11, pila to? 11 to 50 minus 10 million. 1 to 50. That's bravo. Next is, what is the carrying amount of the investment in associate on December 31, 2023? December 31, 2023. Here are the choices. Sorry. What's the answer? Last. Alpha, Charlie, Bravo. Or magdalta? Answer is Bravo. Yun sang Bravo. So, it's given that the beginning balance is 11 to 50. Settled na, okay? So, we now have to compute pila may share niya sa adjusted net income. The net income is 8 million, but we still have to adjust it for the undervalued asset. If undervalued asset, that means the depreciation is also undervalued. So, we need to deduct for the additional depreciation. Pila may undervaluation? 4 million. Pila life? 5 years. So 4 million divided by 5, undervalued by 800. So 8 million minus 800, that gives us 72. Multiplied by 25%. And then you deduct 25% of 5 million as well. Diba? 5 million is treated as withdrawal. So answer is $11,800,000. Since we still have a little bit time, this is quite short na naman. Para lang masigo at tungkuan. Kay by Monday, we'll discuss the whole lease and PPA man good, and PPA is quite long. We'll just discuss this ahead of time para kukuhaan at ma-discuss inig Monday. As I've mentioned, whether ma-discuss siya or dili, it's still part of the exam. Just two topics katong intended afternoon for Monday, the borrowing cost government grant. Wala din ako masenapil. Wait sa can you pwede ba na ma-airdrop bisag walay signal diri no? Ako lang airdrop what's okay na? Government grant airdrop. Wala na ni ma-appeal. I sent one to Thea. Share it sa uban. Okay. Ha? Pasend lang gusto. And I sent sa uban. I'm not sure if nani sila dali niya. I sent iPhone 9 and then Dayan. Nilag lagi. I don't know anong more siya ni hat. Okay. Sige. So we'll discuss just short borrowing cost and government grants. We'll start with borrowing cost. Borrowing cost is just interest expense. It's literally interest expense again. But it's not called expense. Okay, interest expense is presumed to be presented in the expense section of the income statement. This is interest cost. Now, if you remember for PPA, di ba we add directly attributable cost. Kanang mga permits, licenses, unpaid realty taxes assumed by the buyer. Now, borrowing cost presumes na if di ka mangutang o kwarta, you cannot buy the qualifying asset. So it's necessary. So it's a directly attributable cost. Kaya kung magpautang nimo kung walay interest. So this is literally interest cost. No? Interest cost that's deemed to be directly attributable. Now, the entity is not required to apply the standard to a qualifying asset measured at fair value or inventories. Okay, dili pwede qualifying asset measured at fair value or inventories that are manufactured or otherwise produced in large quantities on a repetitive basis. What do you mean qualifying assets? We're talking about assets that takes some time to build. Like building. Di mo na mahuman og 1 year. So, kanang muutang ka para i-finance sa building, kay kinahanglan mo ni mo muutang, the interest arising from the utang will be part sa interest cost, will be capitalized. Can an entity apply the standard to inventories that takes a period of time to manufacture? Answer is yes or no. Yes or no? The answer is not. It's not. The answer is yes. Past 23 does not prohibit applying the standards to these transactions. There's one requirement. They must be considered to be a qualifying asset. They must take time to build or to produce. Mana, wine. So borrowing costs are interest and other costs that an entity incurs in connection with borrowing funds. It includes interest expense calculated using the effective interest method, interest with respect to lease liability, exchange differences for foreign exchanges. For problems purposes, we will only concern ourselves with number 1. Wala kani siya sa mga problems kani. So, next. If the company uses its own fund, no, na siya pundo, iya sang gamiton to finance the construction of a qualifying asset, and the cash being used could otherwise earn an interest. No? Can management capitalize a notional borrowing cost representing the opportunity cost of the cash employed in financing the construction of the asset? For example, si company na siya idle funds. If iya pa ning i-deposito sa bangko mo, earn siya 10%. Pero wa niya gi-deposit, instead iyang gigamit sa construction of the qualifying asset. Can we capitalize? Answer is no. Dili pwede. Own fund sa company. A notional borrowing cost cannot be capitalized. What if the subsidiary finances the construction of the parent na qualifying asset with an intercompany loan, meaning loan between parties, ni parent and subsidiary? Can the borrowing cost on that intercompany loan be capitalized? The answer is yes, in a separate financial statement. So, as I've said, qualifying asset is an asset that takes time to get ready. So, you have inventories, manufacturing plants. In most exams, kasagaran ana are kaning mga buildings. Does PAS 23 provide what is considered a substantial period of time? No. That's management judgment. So, how do we account for borrowing costs? The entity shall capitalize borrowing costs that are directly attributable to the acquisition, construction, or production of the qualifying asset. The rest, katong wala gigamit sa pag-construct, they are recorded as interest expense. Now, there are two types of borrowing costs. We have specific borrowing and we have general borrowing. What's the difference between both? For specific borrowing, it's when the entity borrows a fund specifically to fund a specific project. When you say general borrowing, normally, muhuam siya kwarta and then it will be applied to several projects or for several purposes. For working fund purposes, for financing the construction purposes, or any other purposes. Now, the rule is, for specific borrowing, is it here? In determining the amount of borrowing costs eligible for capitalization during a period, any investment income earned on such fund is deducted from the borrowing cost incurred. So, when you take out the loan, of course, it earns interest. Muna na yung borrowing cost. Okay. In most cases, you cannot spend everything all at once. So sometimes these loans are deposited. So they will earn some investment income. That investment income will be deducted from the interest cost. And for general borrowing, muna na yung magprorata. For assets financed by general borrowing, to the extent that an entity borrows funds generally and uses them for the purpose of obtaining a qualifying asset, the entity shall determine the amount of borrowing cost eligible for capitalization by applying a capitalization rate. What is a Did you have this kind of borrowing cost? Okay, good. So what's the capitalization rate? It's your total annual borrowing cost divided by the total general borrowings. So if you have several banks nga inyong gibaruhan, you just add all interest expense divided by all principal. That's it. Now, there are problems na there's just one. So, simple, no? Interest divided by principal. Sometimes it's given as well. Now, take note, it must be weighted average. So, in relation to the principal. Okay, so after getting the capitalization rate, we have to compute for the average carrying amount of the asset. Kaya atong borrowing cost would be equal to the average carrying amount of the asset multiplied by the capitalization rate. Pero, if you have mixed like specific and general, first you deduct the specific borrowings. Nya ang excess, mo na lang multiply sa capitalization rate. That is your borrowing cost. Now, take note, however, the borrowing cost must not exceed the total or the actual interest expense. Okay? It must not exceed the total interest expense. Now, when do we start capitalization? When it incurs the expenditures for the asset, it incurs borrowing costs, or it incurs activities that are necessary to prepare the asset for its intended use or sale. What if na-construct mo bridge? Na-construct of bridge. Yeah, of course, mo low tide, mo high tide. Inig high tide, mo katrabaho. Would it still be considered as, would you still capitalize the borrowing cost for those period na mag-high tide? Answer is yes. No? If it's expected. However, if nag-strike imong mga laborers, no, or si management decides to suspend the operations, then you would have to suspend the capitalization as well. So an entity shall suspend capitalization of borrowing costs during extended periods which it suspends active development of the qualifying asset. Now, government grants are essentially subsidies, government subsidies. Unsa ganay tawag nato karon? Ayuda. Ayuda. Yes, that's ayuda. So, past 20 governs two items: government grants and government assistance. Government grants are government assistance. So, kaning government assistance in yung bigger circle. So, all government grants are government assistance. So, government assistance are disclosed. But government grants involves money. They involve ayuda. So, when it involves ayuda, you have to account for them. Kaning assistance could include mga technical advices, char. So, they are merely disclosed. So again, grants are accounted for, assistance are disclosed. So grants are assistance by the government in form of transfer of resources, ayuda. So they are sometimes called subsidies, subventions, premiums. You can write here ayuda as well. Recognition, we recognize grants at fair value. And they are recognized when the entity will comply to the conditions attached to them and that the grants will be received. So grants, being subsidies, they are free. You don't have to spend. Actually, there are times you are required to spend. They are actually income. And the way you recognize them as income will depend, no, sa iyang classifications. So, grants related to assets are those grants nga ang panghata kay asset or tagaan mo cash to acquire an asset. And in most cases, these types of grants follow the depreciation year na term. So, for example, ang useful life sa building gihatag as a grant is 20 years. You divide po the government grant by 20 years. Matching principle. And there are also those related to income, okay? Which is, example, let's just say, tagaan mo grant ni government. Ang condition is, manglimpyo mo sa sapa for 4 years. You divide the grant over 4 years. Or, in relation to those expenses incurred over 4 years. So, grants in recognition for specific expenses shall be recognized as income over the period of related expenses. Kato manglimpyo. Grants related to depreciable assets shall be recognized as income over the useful life of the asset. Matong i-mention. Grants related to non-depreciable asset requiring fulfillment of certain conditions shall be recognized as income over the periods which bears the cost of meeting those conditions. For example, tagaan mo og land ni DENR with a requirement nga you have to build a solar farm. It takes you 20 years to build and operate the solar farm. You would have to amortize the grant over 20 years. Then you have government grant that becomes receivable as compensation. Okay, so this is an example of a grant that can be immediately recognized in full. For example, na-recognize ni DENR nga nindot lagi na ang inyong CES kay manglimpyo mo sa tong kusogay baha pagtino, Butuanon, I think. Butuanon River. Kasoy ba mo NSTP nga do sa Binalio something, Binalio 1? Wala mo nagsuway panglimpyo sa pa? Mangunsa din mo sa NSTP ninyo? Okay, yeah, mangrove planting. Sa Liloan, Kotkot. Say for example, nakita ni DNR, nindot lagi na inyong project, manglimpyo mo. Sige, tagaan si San Carlos, dili ka mo. Og 1 million. No conditions attached, just a recognition nga nindot inyong past exercises. Then, San Carlos can recognize it as income in full. No need to amortize because there are no conditions attached. So you recognize it as income as soon as it becomes receivable. So for non-monetary government grants, they are presented at fair value. And then in the alternative, at a nominal amount. Now, normally it's presented at fair value. So presentation of the grant. So it depends kung grants related to asset or grants related to income. If it's grants related to asset, it is set as a deferred income. Meaning, unearned income. A liability account. We call it deferred grant income. And another option is by deducting it from the asset itself. For example, palit nagtukod si San Carlos og building 100 million. Kitagan siya subsidy sa government nga 20 million. Pwede ra ang i-present ni San Carlos as cost of the building is 80 million net of the grant. Or pwede niya i-present as 100 million but sa iyang liability section na siya deferred grant income 20 million. So depende. If it's grants related to income, you can either present it separately or under the heading general heading other income or deducted sa related expense, no, sa match. Now what happens if the company is not able to comply with the condition? This is especially true for government grants with conditions attached, no. If dili ma-comply ang conditions, the company has to return the money. So what would be the entry? You close the deferred grant income, you zero out the balance, you credit cash, kaya you return the money, and you record a loss. For example, kitagaan mo 1 million nga for 5 years manglimpyo mo sa sapa. So pag first year naglimpyo pa mo, kugihan pa kayo. So out of 1 million, nag-recognize na kag-income nga 200k. So ang deferred grant income na lang is 800. Kanya pag second year gitapol naman. So gipauli ang kwarta 1 million. You debit deferred grant 800. Imo iuli nga cash 1 million. Asa mo ng 200,000 nga difference? Loss. Okay? Unless maingon si government grant, ang iuli 800K na lang. Then there's no loss. So, forgivable loan. Kani, common na ba niya sa theories ng exam? Forgivable loans are loans which the lender undertakes to waive repayment of under certain prescribed conditions. So, in cases of forgivable loan, the loan itself will be treated as government grant. Interest-free loan or below fair market value loan. Pautangon mo ni government of 1 million. Ang iyang market interest rate is 10%. But, in your case, di na lang mo pabayar og interest. How much is the government grant? It's not 1 million ha. Kay bayaran magyapon yung 1 million. Ang government grant is the interest. Okay, over the period, applicable period. It is also applicable for below market interest rate. For example, pautangon mo 1 million, ang appropriate interest rate is 10%. Pero si government ingon siya nga 5% lang bayari. So pilang government grant, only the difference between the market value and the discounted interest rate. Okay, so saan to? Government assistance. Again, government assistance is not accounted for technically because there's nothing to recognize. It's more of technical advice. It's an action by the government decide to provide an economic benefit to a specific entity. What if nag-impose si government og new law banning vapes? So, ang resulta, mga tao ni balik nga to sa cigarettes. O, ni dako ilang sales. Do you consider that government assistance? No. Okay? An example of government assistance would be for government agencies go to company, conduct trainings, technical advices. That is considered government assistance. So, free technical marketing advice, provision of a guarantee, government procurement policy that is responsible for a portion of entity sale. Okay, disclosures. True or false? Borrowing cost exists only if you borrow funds from a creditor. True or false? Or pwede ka sa imong self? True. Past 23 may be applied to inventories that are manufactured in large quantities on a repetitive basis. Ha? Ang sige butang ganiya. An entity is not required. Pwede ba? Pwede, but not required. Okay? Pwede, but not required. Interest expense that qualifies as borrowing cost is expense, while interest expense that does not qualify as borrowing cost is capitalized. False, that's bali. Interest expense nga mo qualify is capitalized. A proper term should be interest cost, not interest expense. Interest cost that qualifies should be capitalized. Any investment income derived from temporary investment of borrowings shall be recognized immediately as income in profit or loss. False. They are deducted from the related interest cost. 5. In cases of general borrowing, the entity shall determine the amount of borrowing cost eligible for capitalization by multiplying the capitalization rate to the expenditures on that asset. True, to the average capital. No? 6. The capitalization rate is the simple average rate in the interest rates of all general borrowings. Simple, meaning total interest expense divided by the number of principal. False. It should be weighted, not simple average, but weighted average. Next, entity may capitalize the borrowing cost even if such cost exceeds the cost incurred during that period. False. 8. The entity shall commence capitalization of borrowing costs when any of the following actually occurs. It incurs expenditures, incurs borrowing costs, and it undertakes activities that are necessary to prepare the asset for its intended use or sale. Sure, false? False. All. Next, the phrase undertakes activities that are necessary to prepare the asset for its intended use or sale refers to the actual physical construction of the asset. Meaning, kung magplano pa, way labot. Answer is false. It includes the planning phase if it is absolutely necessary. It's part of the process. Next, number 10. An entity should suspend capitalization of borrowing costs during extended periods where it carries out a substantial technical and administrative work. Answer is false. If it's substantial technical and administrative work, should continue. 11. An entity shall continue capitalization of borrowing costs during delays. If the cause of the delay is common in the geographical region involved, katong example of a bridge, should you continue? True. If it's expected, it's common. Katabang high tide, low tide, but it's expected nga mag-high tide, so it's expected na mahunog dyan ang trabaho ka diyan. 12. Entity shall cease capitalizing borrowing cost when substantially all the activities necessary to prepare the qualifying assets for its intended use or sale are complete, even if the finishing touches are not yet applied. True. Number 13, when a portion of qualifying asset is completed and such portion is available for sale or use, while the other portion are still undergoing construction, the full borrowing cost of the qualifying asset shall still continue until everything is done. Answer is false. Ang portion nga humana available for use or sale, stop na ka sa capitalization on that part. You only do the katong ongoing construction. 14. Dividends paid to an investor can be considered as borrowing cost? Pwede? Answer is false. No? It only involves loans. Past 20. Government assistance or assistance by the government in the form of transfer of resources. True or false? Na by definition, according to past 20, that's false. No? Basta na gani resources, they are considered government grant. So, 16 and 15, bali. So, they are both false. 17. Grants related to income are grants other than those related to assets? Answer is true. Residual definition. So, ang nasa, duha naman na, either grants related to asset or grants related to income. Ang grants related to asset are very specific. Tagaan kag kwarta to acquire an asset or tagaan kag asset itself. If di kayo mo fall na, automatic na siya income na natanan. Next, 18. Government grants, including non-monetary grants at fair value, shall not be recognized until there is reasonable assurance that the entity will comply with the conditions attached and that the grants will be received. That's true. Yeah. 18, 19. The benefit of a government loan at below market rate of interest is treated as a government grant. True. 20. Government grants shall be recognized in profit or loss on a systematic basis over the periods in which the entity recognizes as expense the related costs for which the grants are intended to compensate. If palimpyohon mo sapa for over 4 years, you recognize the grant over 4 years. Pro rata. That is true. 21. Recognition of government grants in profit or loss on a receipts basis is in accordance with accrual accounting assumption? Answer is false. If inyo nang i-record as income the moment received, it's more of a cash basis rather than accrual. Kaya there's accrual, dapat i-earn before i-recognize as income. Next, grants related to depreciable assets are usually recognized in profit or loss over the period and in proportions in which depreciation expense on those assets are recognized. That's true. So, as I've said, if grants related to asset depreciated over 20 years, you divide the government grant over 20 years. 23. Grants in recognition of specific expenses are recognized in profit or loss in the same period as the relevant expenses. That is true. That's true. Next, 24. Grants related to non-depreciable assets may also require the fulfillment of certain obligation and would then be recognized in profit or loss over the periods that bear the cost of meeting the obligations. That's true as well. 25. Government grant that becomes receivable as compensation for expenses or losses already incurred for the purpose of giving immediate financial support to the entity with no future related cost, no conditions, shall be recognized in profit or loss of the period in which it becomes receivable. That's true. (26) Government grants related to assets, including non-monetary grants at fair value, shall be presented in the statement of financial position, either setting the grant as deferred income or deducting the grant in computing the carrying amount. That is true. 27. Grants related to income are presented as part of profit or loss, either separately or other income. It's true. 28. A government grant that becomes repayable shall be accounted for as change in accounting policy. False. Okay, let's have the MCQ number 1. Answer is experienced expense over the same period as the relevant expense. Alpha. Yeah. Number 2, government grant related depreciable asset. If I remember it right, this was the time gitapol kong type ba and I discovered kanang bitang murag voice nga mo kuan. It was before AI pa gani. Kanang nari siya function nga istorya nimo and then mo kuan. So sige ra sa kog basa niya. Sige siya kuan encode. Ha? Where? Some digits. Let's disregard mga kung spelling. Klaro kayo. Government grants. Number 2, answer is delta. Sum of digits. Number 2, depreciable asset. Delta. In proportion of depreciation. Number 3, government grant that becomes receivable as compensation for expenses or losses already incurred when it becomes receivable. Bravo. Number 4, in case of grants related to an asset, which of the following is correct? Bravo. Kingdom. Record the Grand Kingdom. Deferred grant. Grant income. Record the grant income in the first year. 5. In case grants related to income, which of the following treatment is prescribed? Answer sa previous one is bravo. This one is bravo. Number 5, answer is equity. Answer is bravo as well. 6. Borrowing cost can be capitalized as cost of the asset when? Best answer is delta. 7. If the qualifying asset is financed by specific borrowing, capitalizable borrowing cost is equal to what? Charlie. Number 8. Which could be treated as a qualifying asset? Answer is Charlie can be an answer. Charlie and Alpha. Alpha ang nasa nagyod sa kon. Answer key. Alpha. Investment property. It's one sa list. Ang inventory that is manufactured or produced, it's not required, but they can. Number 9, which is official answer is Alpha. But if this would come out and you would answer Charlie, I would consider it. Which is not a condition that must be satisfied before interest capitalization can begin on a qualifying asset. Asset, not acid, no? Answer is not a condition. No, dili appeal. Charlie. Then is the period of danger in which interest must be non-salary. Is the period of I don't know, sir. Lugyan na ito ko wala naggamit ani. Is the period of mo to skip number 10. No, it's a answer is alpha. I think it's the period in which you must stop the capitalization. So when do you stop the capitalization? When it's substantially complete and ready for use. 11, which is not a disclosure requirement in relation to borrowing cost. Answer is Charlie. Which is not considered as a qualifying asset. How toll bridge? A toll bridge. Answer is bravo. If you can purchase, if you're not going to manufacture it, it's not borrowing cost. You just purchase. 13. Assets that qualify for interest capitalization includes alpha, which cost may not be capitalized or should not be capitalized. Charlie, imputed cost of equity. 15, an entity can commence capitalization of borrowing costs on a new construction project when Charlie. And MCQ. Company purchased a varnishing machine for 6 million. The entity received grant of 540,000. The accounting policy is to depreciate the asset over 4 years on a straight line basis and to treat the grant as deferred income. What is the carrying amount of the machine on December 31, 2023. Two years. 2 years nilabay. Answer is? 2 years nilabay. Answer is? Alpha. Again, there are two ways to present grants related to asset. Either you set it up as a deferred grant income or as a reduction. 17. What amount should be reported as deferred grant income? Answer is bravo. So half has already been recognized. Ang liability na lang is 270. The other half. 18. Peach Company purchase machine for 7 million, receive government grant of 1 million. The machine is to be depreciated using a straight line basis of over 5 years. Estimated residual value is 500 and treated as grant income, deferred grant income. What is the carrying amount of the machine? 7,065,000 divided by 5 years. Answer is Charlie. What's the balance of deferred grant income? Pila ka years nila by 2 years? 500 times 3 over 5? 1 million times 3 over 5. Answer is Charlie. Di ba magdidak og residual value ha for deferred government grant? You only do it in computing the carrying amount of the asset. Number 20. So again, this is Charlie and this is Charlie as well. Number 20. On January 1, 2022, January 1, 2022, Lion Company purchased a machine for 8.5 million and received a grant of 1 million. Treated as a reduction of the asset. The machine is to be depreciated on a straight line basis over 5 years with residual value of 500,000. On January 1, 2024, the grant became fully repayable because of non-compliance. What should be the depreciation for 2022? So, for 2022, that is 8.5. Divided by 5 years. Answer is delta. So 8.5 million minus 1 million minus the residual value. I take note, it's presented as a reduction of the asset. This one, 2021, what amount should be reported as depreciation for 2024? It became repayable. Answer is Charlie would have been correct for year 2025 and onwards. Na naman, di ba ni-violate siya 2024, 2 years after. Now for the past 2 years, naka-benefit siya with reduced depreciation. 1 million divided by 5 years, supposedly for each year maka-benefit og 200,000 each. Instead of 1.6, ang iyang depreciation was 1.4, di ba? Naka-save siya 200,000. Now, na-violate niya pag year 2024. So, iyang i-recognize nga depreciation would be the depreciation for that year, which is 1.6, plus katong 2 years worth nga depreciation. 200,000 each. So 200 plus 200 plus 1.6, that is 2 million. Pero if pangutanon mo, pilay depreciation sa 2025, the answer is 1.6. Kasabot? So 1.6, 2 million because we're talking about the year nga na ay violation sa condition. But after that, mobalik na ta sa original depreciation. 22. Batangas City agreed to provide probity company with 5,000 3-year zero interest loan. The prevailing rate of interest for this type of loan is 10%. What is included in the journal entry? $5 million na ha, di na 5,000. Sorry, that's 5 million. .75. Again, that's 5 million. Answer is delta. It's correct. Answer is delta. You debit cash. The journal entry is debit cash 5 million. Debit discount on notes payable 1,250,000. Credit notes payable 5 million and credit deferred grant income 1,250,000. So basically, the whole interest expense, the discount, is your grant. What amount should be reported as grant income for 2022? Answer is yes. Answer is 300. 75. Sa 24. This is taken from Milan. No, not Milan. Roque. You're familiar with Roque? Auditing problems? Roque. What amount of interest incurred in 2012 would be capitalized? Oh my God. Okay? So, of these three, you have the construction loan as a specific loan. The other two are general borrowings. So, let's start with the capitalization rate. 14 million times 10%, that's 1.4. 10 million times 11%, that's 1.1. So 1.4 plus 1.1, a total of 2.5 million, divided by the total principal of 24 million. 2.5 divided by 24 million. 24 million is 10.42%. We'll just use 10.42%. So we now have our capitalization rate. So it's given that the weighted average rate is 36 million. Now we have a specific loan at 20 million. So pila raman atong maggamit sa general borrowings? Only 16. So 36 minus the specific loan at 20 million, we have 16. So 16 million multiplied by pila to 10.42. 1,667,200. That is for the general borrowing. Plus the specific borrowing pa, which is 12% times 20 million. 20 million times pila? 12. That's 2.4 million. So, you add that 2.4 million sa katong answer na to sa general borrowing. Answer is bravo. Kuha 100. Rounding error. Answer is bravo. Should be 406,700. Okay. So first, again, construction loan is a specific borrowing. Short-term loan and long-term loan are general borrowing. So first thing is we compute for the capitalization rate, which is we add the total interest expense, 1.4 plus 1.1, for a total of 2.5 million, divided by the total principal of 24 million, that's 10.42%. And then out of the 36 million, we deduct the specific borrowing. So only 16 million is multiplied to 10.42. So that's your borrowing cost sa general. Then you just add na lang ang borrowing cost sa specific na 2.4. Bravo. So we'll proceed. Number 25. Okay, Kenny. Maracas. Now this time you would have to compute the average average capital. Average accumulated expenditures. Let's take it one by one. Let's start with capitalization rate. So the first loan is specific. Ang atong general is 10% and the 8%. So 5 million times 10%, that is 500K. 10 million times 8% is 800,000. So 800,000 plus 500,000, that is 1.3 million divided by 15. What's 1.3 divided by 15? 8.67. Sige. So we now have our capitalization rate, alpha. Arita sa average accumulated expenditures for 2012. Now, take note na kay accumulated in 2011 including capitalized interest rate, 18,228,500. So, nag-start outstanding na siya since January 1 up until the end of the year. So, sa first, kanang accumulated, you multiply it by 12 over 12. Second, kanang March nga expenditure, you multiply it by March, April, May, June, July, August, September, October, November, December. So, times 10 over 12. Ang September, October, November, December, times 4 over 12. December 31 times 0 over 12. Kasi labot. No? Kaya na-incur siya December 31. Technically, wala na. So, pila itong average expenditure? $25 million. Ano itong kuwan? Wait sa... So, pila itong average expenditure. So, we start with 11 million. Not 11 million. 18,228,500. 18,228,500 times 12 over 12. Next is 7 million times 10 over 12 to, no? Then 4 million times September, October, November, December times 4 over 12. Pila total? 25 million 395,167. So we now have our average. So first, we apply ang specific. Pila kita itong specific borrowing? Saan to? Atong specific borrowing is 10 million. So, ang atong general borrowing na lang needed is 15,395,167 multiplied by pila to atong capitalization rate? Pila to answer nato dre? 8.67. So, pila atong interest for general borrowing? $1,000,000. I'll just write it on top na, di masigo. 1,334,761. Mo ni ang general. Ang specific, 10 million times 12. 1.2. So we add how much? 2,534,761. Let's check. 2,534,761. Answer is delta. What amount of capitalizable interest in the amount of capitalizable interest in 2012 is? Bravo. Answer is check. Unsa tay condition gani? The capitalizable interest must not exceed the actual. Pili actual. Atong i-compute ko nung actual ko no. Ang actual is pila ni 1.2. Ang kani is 500. Kani is 800. Pila total? 2.5. Asa mas gamay? 2.5 or ang 2,534? 2.5. So the answer for capitalizable interest is only 2.5. Because the condition is that the capitalizable interest must not exceed the actual interest incurred. So what's the total cost of the building now? Balik na ko ha. What is the total cost of the building? So natay 18,228,500 plus 7M plus 4 million plus 5 million plus pila kita atong interest? 2.5. So pila total? 36,728,500. You may wonder, so pila lagi na itong 5 million yung December 31 naman. We're not talking about the average capital. These are actual expenses. So apil gid siya. Okay? This one. So same thing. Viola Corporation contracted with Mega Construction Company to construct a building for 40 million pesos. The contract provides that Viola is to make 5 payments in 2012 with the last payment scheduled for the date of completion. The building was completed 2012. Viola had the following outstanding debt. So we have 3 debts. Saan ba to? So first question is, compute in the computation of the avoidable interest, the appropriate capitalization rate is. So mag-compute siya tas capitalization rate. Pila total interest? 2,880,000 divided by 26 million. Answer is 11.08. So the answer is delta. This one you have specific, and then general. So 10% times 12 million, that's 1.2. 12% times 14 million, you compute. You add and then you divide it by 26 million rather. Next, what is the average accumulated expenditure? So balik na ito. Sige. Sa January, 4 million times 12 over 12. March is 8 million times March, April, May, June, July, August, September, October, November, December times 9 over 12. For June times 6 over 12. For September times 3 over 12. December, so pili average. So the answer for the average is 18,300,000. So the next question is, what is the total avoidable interest cost in 2012? Sige. Pila tong total na to? 18,300,000. So first, we take out the specific loan. Pila atong i-take out for the specific loan? 17. So pila naman lang atong utangon from the general fund? 1.3. So ang 1.3 i-multiply sa capitalization rate nga 11.08. So pila? 144,040. And then atong utang for the specific borrowing, 17 million times 12%. How much is that? 2,040,000. So total is 2,184,000. Letter. Last choices. 2,184,000. Ay, by the way, compounded man ni siya quarterly. So it's not as simple as 17 million times. So kani atong gideduct diri, di na siya 17 million. So pila man siya dapat? Compounded quarterly. So dapat the way I mean this is correct, but what I mean is this one ba? Asa to? Kaning 2 million 2,040,000, no? It's not 2,040,000. Compound quarterly, sumag-compound ta. Adi, pila ni siya quarterly? Yeah, 12% pa no? Raised to the power of pila ganin siya? 4 years. Let me check sa... One plus 0.12 divided by 4 raised to the power 4 times 16. Year now. So you have it, I'm sorry. Saan ba to? So future value of 17 million multiplied by 1 plus 12% divided by 4, that would give us 1 year, 1 year naman atong i-compute. So 0.12 divided by 4 plus 1 raised to the power of 4 times 17 million 19 133,649 133,6 ako lang ni 650 minus 17 sana siya 19133,650 minus 17 million 2,133,650. Now we use it to and add pila ito antong general 144,040 22,77,690 nasa choices 22,77,710. So this is closer. So answer is alpha. Answer is alpha. Just because sa kaning lahing computation because this is compounded quarterly. Compounded quarterly. Lubad na murag poli na kita. What is the amount of interest that should be capitalized? So we check. Nilapas ba ta? Pila total interest? Is Delta, 37 is Bravo, 38 is Charlie, 39 is Bravo, 40 is Charlie, 40 is Charlie, 41 is Alpha, 42 is Alpha, 43 is Delta, 44 is 11, that is Charlie, and last number 45 is 600, Charlie. Okay, so next meeting we'll just have to discuss PPA na naman this. Okay? PPA on this on Monday.
CPA, Government Depreciation, Regulation, and Environmental Evaluation. By the way, natin yung message sa buwan na supposedly mag-walk about Sunday na. Mag-online. So, hindi na matatong if Monday face-to-face. I have an appointment on tomorrow, but it's available. So we'll continue on Monday. Whether we finish or not, the topic is still the same, the coverage. And for the test map, you remind me, I'll send in the test map. Okay? But I can always send on my part. Kago 30. 25, 25 na 30. Nakatay na sila 30? Okay, sige. I'll try either Carol Gabi or Uma. Sige. Thank you. Yes. Yes. For
the specific borrowing, sir,
yes.
may diba, sir, different ang treatment sa weighted kung sa balik, sir. Ang weighted kay a portion niya i-compute sa weighted average expenditures sa specific borrowings, sir. Pero si weighted kay kung similar sa like denote siya.
Wala ka bang type of branch ako? Kasi ginagamit niyo pa ay Asean. I will follow the Asean. So, okay rin na? Ako may ganito? Okay, sige. So, mistake. What about the others? Is it recorded or will you announce? Kaya ito mag-announce sa... Okay, ang follow the lines. Ang follow ay ito discuss sa pagkakas. Yeah, that's nice. And it's easier sa typically communicated. So, rundown sa itong nagrihan sa borrowing cost, we follow that. Sa debt investment under OCI, we still follow VALIX, meaning, sorry, not debt investment, trading securities na debt investment or debt investment through PNL, we still follow VALIX. We do not recognize interest income, only changes in fair value to PNL. So, talaga yan. Okay, that's over. Okay. So we stick to that. Right? See.
Wala ka na announcement, sir.